dangerous. So what? We have no rappers. So when you're guiding your businesses, they need to follow some sort of guide, some sort of plan. Are we together? This in our business we have some sort of what? Plan. Even your business that you support, whatever they are, you should have some sort of what? Plan. So now, what do we have? Now we are going to start recording. So now we are at step what? 3. Are we together? So what do we have? We have what do we have? We have cash. Cash of what? Can you write? Then we have machine worth what? Then we have worth. What's the total? Where did it come from? It came from cash. Are we together? Are you picking the step-by-step process? So now we got our money from Uncle Jude. We decided to start this business. The first thing we did was put the cash into the what? The business. And now we said where are we going to operate from? We have found where to operate from. We have what? Also got a machine. Are we together? So now we need to move on to the next what? Step. Yeah? So if you get a machine, what do you think the next step would be? Hire people to? What are they going to operate? So you're going to hire the people to come operate the machine. What? You need to you have what? Raw materials. Because then if you hire people, they're just going to come and turn an empty machine. You need what? Raw materials. So the raw materials are represented by the royal what? You've seen it. Some of you are not looking up here, you're not going to see it. It's this what? You've seen it? It's blue. Let's take it as blue. I saw like royal blue. It's just blue. So each raw material costs what? 3. Each raw material costs what? 3 what? Shillings. Are you together? The capacity of the machine is what? 4 units. Each raw material costs what? 3 what? Shillings. So how much in raw materials do we need? So we have our machine. Now we are getting what? Raw materials. You've seen what the raw materials what? Are. So each one of these costs what? 3 shillings. Are you together? And if you look inside here, there are what? 3 what? Chips. Are you together? So the capacity of the machine is what? 4 royals. Are you together? So we'll need what? 4 of what? Of raw materials. Are you together? So you're going to buy the raw materials. Are we together? The machine, they told you I told you in the beginning, the machine has a capacity of what? To produce 4 royals. It has a capacity to produce 4 royals. Are you together? So you need 4 raw materials to produce 4 what? Royals. Are you together? Now we are going to pay for those what? Raw materials. Are you together? That's the next step. We said each raw material costs what? 3 shillings. And we need what? 4 of them. So how much do we pay? So you're going to pay 12 from the cash. Then after they're paid, they get this. So you get them, put them in the box. So after you've gotten them, then you pick the raw materials and put them on the what? On the machine. First pay. Now, if you don't count well, your balance sheet will not what? You start making mistakes. No, actually, what will happen is you will pay more for you pay more for the what? The raw materials. That's how you start making what? Losses. Are we together? Hmm? So now, after you've paid, then move the raw materials into the machine. Move the raw materials that you have paid for into the what? Into the machine. Hmm? Hmm? These are the raw materials, remember? You paid for them, put them in the what? In the machine. Hey, sorry. That's a mistake. Not in a machine, put them in where there's raw materials. So we have followed this board very clearly. Put where there's raw materials at the bottom. Put where there's raw materials. That's why it's very important to follow the what? The board. So now we are going to record because we've had some what? Transactions. How much cash do we have? What else do we have now? Worth. Then we have, what else do we have? What's the total there? Where did it come from? It came from capital stock. So what do you notice here? Have you finished recording? Are you balancing? Are you balancing? Are you balancing? Everyone's okay? So what do you realize now on your board? What is happening? What's happening on your board right now? Yeah? You're running out of cash. Are you together? Your cash has reduced, but you've not just spent it, you've acquired what? Are you together? So the cash has reduced, but you have acquired assets. So now here we're going to discuss a bit about, you see now we have been spending what? We've been spending what? Cash, but we've not made any what? Profits. Is there a difference between cash and profits? Eh? Why haven't we made any profits? We have not what? We've not sold anything. Are we together? Eh? Some people are talking, you're having mini discussions, all the questions should come to me. Are we together? So, now your cash is running low. What do you need to do? You need to, if your cash is running low, what do you do? So you need to go to the bank. You need to go to the bank and get a what? A loan. Now, this bank, you've gone to the bank, they're giving you a line of what? Of credit. Do you know what a line of credit is? Who knows what a line of credit is? They're telling you, we are giving you a line of credit of 60, meaning we are giving you a maximum amount of what? Of 60. But doesn't mean you take it all at what? At once. Are we together? So we're saying we are giving you this amount of money. You have access to what? 60 shillings. Are you together? But you don't have to take it all at what? And once. So the bank is giving you a line of what? Of credit of what? 60. So you see these ones, the red chips. Do you see them? You don't have them. I'm showing them to you. You're going to get them. Nyabo, Nyabo, you on your phone? I'm showing. These are the red chips. You need to pay attention, please. So when you get these ones, it shows that you've taken a what? Taken out a what? A loan from the what? From the what? From the bank. And that loan you get what? Cash. So for the amount of loan that you take, you get equivalent in what? In cash. So since all of you are running loan credit, you're all going to get? Eh? Yeah? You're going to get 20 what? You're going to borrow 20 for now. Yeah. The payment. So, listen. Every time you take out the loan, you have to pay interest. Eh? And interest is what? One. Hey. One shilling. Are you together? And for 90 days. So the loan is for 90 days, payable in what? In 90 days. So every month you're going to be moving it, and when it gets to the cash, you have to what? To pay it. Are we together? Interest is 1 shilling. Yeah. 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 Negotiation, no. So loans are repaid in 90 days. Uh-uh. Uh-uh. You cannot. Eh? He can hire. He cannot hire. We are all good? Huh? Huh? So now we need to start recording. Huh? They have paid. They should have paid interest. Huh? At this level, we don't pay interest, do we? Yeah. Pay interest. We said the loan has 1 year of interest, so you need to pay interest. So get out 1 and put where you see interest. No, on the side. Yeah. Yes. You haven't? No, but we get a loan, you start paying interest. You have to pay interest according to the rules of the game. You have to pay interest, yes. But you're already going to start spending it. As long as you're taking it, you're paying the interest. Pardon? You have to pay what? But you still have to pay. So we are. This is the simulation here. We're following it step by what? It's the rules of the game. When you take out a loan, you pay for what? You pay interest. Yes. Have you paid? So I told you, forget the world. Come to this world here. You're in another world now. Yeah, step 5. We want to balance at step 6. We are going to balance. We are going to balance. So now we are going.
I get what you're saying.
That's why I was keeping it. Then you guys said. Yeah. Yeah.
Yes.
I was. That's why I was like, yeah.
Let's put negative 1 here. That is your point.
So we are recording now. So now we are. Are you paying attention?
Yes.
So we are going to change. We are going to change the situation a bit. So we are going to get the interest that we have paid, and first put it back. First put it back in. It's not it shouldn't be like that because you don't know the game. You know the real world. Are we together? So now let's record. We are at step what? How much cash do we have? Raw materials. We have what? Step by step. We have how much? Cash of what? We have raw materials of what? We have machines. We have land and buildings. What's the total? So where did it come from? Capital stock of what? But then we took a loan of what? Yeah. So is it balancing? Now you get the feel of what your businesses are going through every day, struggling here. First of all, it is important to record. You see the importance of recording? If you don't record, you immediately get what? Lost. So you need to support them to be able to continuously what? Record. Are you together? But then when you record, then it also helps you to keep afloat of what's what? Happening in the what? In the business. Are you together? Yeah. So now we have, everyone's balanced? We are all okay? Now we are going to the next step. The next step is we are going to hire. We are going to what? Hire workers. We are going to hire workers in production. We need workers in production. We need in research and development. We need in sales and marketing. And we need in what? In admin. Are we together? You see the wooden people in your those are what? Those are what? Are workers. So at this point you've been working with your friends, you've not been paying anyone. So now you want to sort of formalize. You have your equipment, you have your raw materials, so you need workers start what? Operating the what? The business. And that means you have to formalize your relationship with whoever you've what? Been working with. Or get other people on board. Are we together? So, for now, there's no cost of what? Hiring workers. But in the future, every time you hire a worker, it costs you 1 shilling. Because that worker needs their recruitment costs, and then you also have to train them. Are you together? But for now, we don't what? Now, each worker is paid 1 shilling per what? Each worker is paid 1 shilling per what? Per month. Are we together? So you have the wooden people. So on one of them you have 12. Have you seen? And then the others have 1. Now the 12, those ones, we said the capacity of the machine is what? The machine needs 12 people to what? To operate it. So that people figure represents 12 what? People. Are we together? Then you need to hire, you need to get the 12 and put them on the machine. So those are the ones who are going to operate. You see on the machine, there's a place where there's also an indication of a person. Eh? So put the 12 there. If you put them sleeping, they won't work. Yeah, they have to be standing and alert. Then you need to hire one person for R&D, which is research and what? And development. Are we together? So there you have change and innovation. On the board you have change and innovation. That's why you put that person. Their job is to keep researching on how you can make your business better. Are we together? What does the R&D person do? What does the... No. I didn't say monitoring and evaluation. What does that mean for the business? He's always looking for ideas on how you can innovate and make things better. Are we together? So when you're supporting your businesses, they need to keep innovating and what? They need to keep what? Innovating. The other person you're going to hire is in what? Sales and marketing. Are we together? And then the other one you're going to have is in what? Admin. So now you have, are we all together? We have our workers, we have our machine, we have the raw materials, we are ready to what? To what? To work. So we have started what? Operations. So we need to pay our what? Our workers. Are we together? So when the workers have started what? Producing, so we need to what? To pay them. So we are going to pay the ones who are already first working, which are the 12 for the machine. Are we together? We said each worker gets one shilling. Are we together? So you're going to get how many chips from cash? So have you gotten them? 12? So you're going to distribute them. You're going to put these cash chips where? So these workers are adding value to the what? Raw materials. Are we together? The workers are adding value to the raw materials. So you're going to get the cash chips and put them to the raw materials. Are we together? So you have four raw materials. Are we together? And you have 12 workers working on what? And these 12 workers are paid one shilling. So they are paid a total of what? 12 what? Shillings. So you're going to distribute those 12 shillings in the cubes of what? Of the raw materials. So how many are you going to put in each? 3. Hey, yeah. So wait a minute. We missed a step. We missed a step. When we got the workers first load the raw materials into the what? Into the machine. So load the raw materials into the machine. So get those chips before you put them in the raw machine in the machine. Here, put them here. Then you can now put the cash chips. Yeah. We said we are putting them because the workers are adding value to the what? To the what? The raw materials. Are we together? So when we pay, 1 shilling, they add an equivalent unit of value to the what? The raw materials. Are we together? So now we have our raw materials. They're in the machine. Are we together? Have we all loaded? And we've paid the what? The workers. Are we together? So listen to me very carefully. So when we have these raw materials, and then we add the value for the workers, this becomes what we call work in what? Progress. Are we together? So it's now in the machine. It's in the process of what? Being turned into the what? Final what? Product. Are we together? So that's what we call what? Work in progress. So yes. Don't underpay your workers. So now we're on step 6. Can we start filling in? Yes, you have a question? So let's ask all our questions at the end, because now that's going to come a step further. So you only ask a question about the step that we are on if you haven't understood it. You have a question? So are we recording? I see people working with chips. I don't know what they're doing. So we are at step what? Step what? 6. How much cash do we have? How much cash do we have? How much cash do we have? If you're not sure, check your what? Not calculator, check the chips in the what? So how much cash do you have? Then we have work in progress of how much? Someone is saying 12 and I'm saying 24. Who is correct? Work in progress is 12. Are you counting the chips in work in progress? It's 12. Why is it 12? So let me explain. Yes. You're going to say something? So she says work in progress is 24. Why? So we said work in progress is this. There we have the raw materials, which we divided by what? By 3, plus the 3 we what? We topped up. So if you're not sure, count the chips in the what? So when you count those chips, are they 12? Eh? So the salary that has been paid has been translated into the value. So these guys have been paid money, and that's their salary. They have taken it home, but then they have added value to the raw materials. Are we together? So that's what we've translated. We've translated what we've paid them into the value they have added into, because we paid them for something. Are we together? So now our work in progress is what? Yes. Pardon? No, not yet. They're not yet working. Yeah, they're not yet working. You hired them, but they're not yet working. You've identified them, they're waiting, you're not yet working. You're now in the production. So how much work in progress do we have? Raw materials, how much do we have? Machine, land and buildings. What's the total? Where did it come from? Uh-huh. So have you noticed something interesting? Hmm? We are spending cash, things are moving up and down, but the capital is still what? The capital stock hasn't what? Changed. It's still. Eh? So it's just still representing how much money we have put. So now here we have two sources of what? Of financing. We have the money we put, which is our capital, but then we also have the loan. Are we together? Do you see the difference? And it's all represented. So whatever we have in the business, in terms of buildings, machines, is coming from both the money, the equity, plus the loan we took. We took the loan because we had run out of. Are we all together? Right. Now, these guys have been producing. So these ones have also started what? Going to the market to start what? Selling. So we are going to have to pay these other what? Workers. Are we together? So we said each worker is paid 1 shillings per what? Per month. So let's pay those workers. Have your balance sheets balanced for step 6? Huh? Yeah, because now we have these other workers. Yeah. they are going to sell. They are going to sell. So now, back to where we started. We said, yes, man. What do you mean? You're running it. You're making all the decisions. Buying the machine, everything that we're doing is you. Huh? To papa. To papa. Tona wana kutunda atego yagala sente. You haven't sold a single thing and you want money? You're dangerous. And someone's asking, what about me? So have we paid these other workers? Yeah? We paid them? Huh?
That is very important to know. So sometimes businesses fail because they put a big burden of their own personal expenses on the business. So you haven't sold. Usually I see businesses, they raise 30K and the first thing they buy is a Subaru. Yeah? So you have to manage. And that's why when we are doing investment, nowadays we actually appraise you as a person. We look at your lifestyle. Because if you come driving a car of 100 million and you're looking for 50 million, for me, I'm scared. Right? So that is very important for you to look at, especially you, the hubs. If you see a sign of someone who is too luxurious, right? But they're in a program to get 20K, very bad sign. Very bad sign. The truth is, business is not like employment. So you can't be in business and expect to have the same level of comfort like someone who is in a secure job that they have worked in for 20 years. And it's always important to be honest with entrepreneurs. Because you see, they hear only rosy stories. The people that come to inspire them come driving a Lexus. They will tell them all the good things. They will not tell them the difficult parts. The difficult part is when you're starting a business, a sacrifice. You get it? You may not have the luxury. You may have to spend on a machine instead of a car. You may have to pay your workers instead of paying yourself. That's the sacrifice, right? So that we have not even sold. You have just gotten 20K before you sell. You're taking that. You first go and dust yourself. You know, you buy new shoes and you get. Then, and that's why we are creating NGOs and calling them businesses. So someone keeps raising money and raising, but no progress on the business. You see some progress on them as a person. Maybe they have a newer car, but you don't see progress on the business. So that is very important to note. Because now with that money, if you took out and you're paying yourself, you see that in the future you won't have money to do business. Yeah?
So is that clear? Are we together? So now we started with what we call a balance what? Sheet. Are we together? This balance sheet shows what we have in the business and where the money came from. Are we together? So we got cash into the business and we have been what? Spending. When we run out of that cash, we got a what? A loan, and we still spent what? Some more. Are we together? So now we are going to move into another recording statement, which is called the income statement. Are you together? The income statement shows what you've paid out, or the expenses you have met, and how much money you have gotten. Are we together? So if you look on the right hand side, on the left hand side, you see there's a word income statement. So it shows expenses, and we have already started making what? Some expenses. We started paying what? Salaries. That's why you see we put those payments there. So it starts with, you have the income statement, you have the sales, which is what you sell, the revenue you make. We haven't yet made any what? Any sales. Are we together? Then you have cost of what? Goods sold. That's the cost incurred to sell the goods that you're going to, the goods that you have sold. Are we together? Are you following the income statement? Do you all see it? Then from there we have, yes. Then there we have what we call the contribution margin. And the contribution margin has two aspects. It has machine overheads and depreciation. Are we together? Now machine overheads, so those ones include maintenance, maybe if you're using fuel, things that help the machine to run. Are we together? Yeah. So we are going to pay 1 shillings for that. Cash, pay 1 shillings for. So you're going to get cash and pay for that one. Yeah? For the machine overheads, that's where we are now. No, machine overheads. Yeah, that's what we have discussed. Like fuel, maintenance costs, all these kind of things for the machine. Now the next one is called what? The next one is called, under contribution margin, is called what? Depreciation. So when you have a machine, the more you use it, the more it starts to lose what? Value. It's like having a car. When you buy it and use it for a month, it's not the same as when you have what? Bought it. Are you together? Yeah? But this is, you don't actually pay for that loss in value. It's not a cash what? Payment. Are you together? So the car starts to lose its own what? Value. So you're going to go to the machine where it's representation of the copper chips, and you're going to pick out 1. You remember the copper chips on the machine? You're going to pick out 1 to show that your machine, because it's working, has started losing what? Value, which is depreciation. So it's a cost that we have to incur. So you're going to get and put it where depreciation is. So we're not putting the silver chips because it's not a what? A cash what? Payment. Are we together? It is the machine itself losing what? Value. And we said that the copper chips are representation of the value of the fixed what? Assets. In this case, the value of the machine. Are we together? So since it's losing value, we've taken out. Then, what next? You have what we call selling, general and administration. Do you see that on the board? Selling, general and administration on the income statement line. Do you see? So there we have already paid off the what? Those workers, we have already paid off. They're part of that. What else is there? You have admin overheads. Do you see that? You have admin overheads. Admin overheads like internet, things like that. So you have also pay 1 for them. When I say pay, you get out of your cash and you So in this month we said in the future when you hire someone, you incur a cost of what? Or recruitment, which includes recruitment cost plus what? Training. But in this month we're not what? Incurring that what? That cost. Are we together? What's the other one there left? Huh? Are we paying rent? Why? So we bought our own what? We're not paying what? Any rent. So. No, because when you're starting your business, you work with people you know. Are we together? You usually work with your friends. There are people who you what? You run with them, and as you the assumption in this is as you do things, you're learning together. So they already understand what they are going to be doing. So you're just sort of confirming them in the different what? Roles. So out of your friends and what you're like, this person is the best for my sales and marketing. So and so will be. But then for the future, you're hiring someone completely what? New, and that means you have to reacquaint them, you have to train them to take on whatever role you want to take. That's why there's that cost. Are we together? Yeah? Pardon? Yeah, it's there, but in this particular simulation, we assume we're not paying them in the first one. There's no recruitment cost in the first one. Now, we are going to fill the next step. We've paid admin overheads. We know admin overheads. So now, what else is there? We have what else not paid for? We are going to work on that, and then no, we took out a loan. Remember, and we have paid interest beforehand, yeah, and then we took it back. So now it's time for us to pay what? The interest. Yeah, that's what happens. That's what happens. So when these entrepreneurs come, you understand now what they go through. They are making all these expenditures, but they have not even sold a single thing. But then you can't start to sell without a machine. You can't start to sell without an operation site. You can't start. So you literally have to make these payments before you start selling. Are we together? So we are at what? We are at step 7. In our books, we are step 7. Are we feeling? How much cash do we have? People are feeling it. Someone said, "Oh my God." Machine is what? Why is land and building still 20? Machine is also a fixed asset. You see, I said this one does not depreciate. Does land and does land depreciate? So the assumption is here: land and buildings don't what? Depreciate. Are we together? Yeah, but land doesn't depreciate. So the depreciation of the buildings will be covered by the appreciation of the land because land increases in value. Yeah. Are we together? We are on step 7. Huh? So you're feeling what's on the board? Huh? We're on step 7. You're feeling what's on the board. Yeah. Ndikutendeka. Ndi mu training wadogamba ki? Kamale wano ngenda kukubira. So cash is how much? Cash is how much? Work in progress. Huh? Work in progress is what? Raw materials. Machine. Land and buildings. What's the total? Eh? Where it came from? Loans. Loans is what? Eh? Capital stock. Loans is 20. Why are you saying 21? The interest is. Yeah. That's what we're going to do. We have to go to the market. Are we together? Huh? So loans is what? Huh? Loans is 20. Capital stock is? What's the total? What's happening? We are not balancing. Are we together? So before, you see, expenses. So you see, can we all listen? Can we all listen? The balance sheet shows what you have in the business and where it what came from. Are we together? So we use some of the cash in the balance sheet to pay expenses in the income what statement. Are we together? So we took out some of the money that was supposed to be showing what we have. Are we together in terms of what? Of cash to pay the what? Expenses. We paid salaries, we paid machine overheads, we paid admin overheads, we paid all of this. So because of that, it is not what? Balancing. Are we together? Yeah? Because of that, it's not what? Balancing. So now, the next stage for us is we have been, the workers have been working on the what? On the raw materials. So our work in progress is, we are going to prepare to start what? Selling. Are we together? So now we are going to go to the market. That's what no, but he's got us the market where we are going to sell. That's what we're paying him for. Are we together? So it's not you understand why it's not balancing? Yeah? We took out some of the cash that was supposed to be on the balance sheet to pay expenses. Yeah? Are we together? Yeah. So now, pardon? We have not yet gotten to that level. No, it's on income statement. You are on balance sheet. Are we together? Someone is asking where is the depreciation going? We have been filling in the balance sheet. If you look at the top of page 3, it is what? Balance sheet. Are we together? Huh? And this one is already under what? Income statement. Are we together? So now we are going to go to the what? To the market. Huh? So she's ask a question. She's asking, help me understand where the 7 shillings has Gone. Where are the 7 shillings gone? To the expenses. Yeah? Are they 7? If you count them? Yeah? So, including what? The machine also lost value, so it has gone. Are we together? So you see that, you see how they are interacting. So now we are going to go to the what? To the market. Now there is an expense that we haven't yet paid for. Can you see on your income statement? There's an expense we haven't yet paid for, which is what? On the income statement, what haven't we paid for? Advertising. So you see what are these? You see what these are? Have you seen them? You're going to get them. So now we are going to pay for advertising. So these are what? These are bid forms. These are called bid forms. Do you see them? And for you to go to the market, you need to bid. Or you need to get someone who writes for you a proposal or does some market strategy for you. This is representation. This what? Bid what? Proposal. Now each bid proposal costs what? 1 shilling. Are we together? So for this market, for you to go to the market, you're going to put in 2 bids. Are we together? For this one, you're going to put in what? 2 bids. For the next market, you decide how many bids you want to put in. But for this one, you're going to put, because the first one, you're going to put in 2 bids. That means you have to pay how much? So get out your cash and pay for the 2 bids. You have to get paid for them first before you get them. Yeah. No, pay there. Yeah. So you have 2 what? Bid forms. Now, I'm going to give you each of you. Now you see you're working as a what? You're now working as a team. You've now joined. You're in the same what? Company. So for every table, that's a what? A company. So I'm going to give you 2 minutes to come up with a company name. All of you together agree as you're on the table. Come up with a company name. You have 2 minutes to come up with a company name. Write the company name on the papers. No open water on the tables, please. No open water on the tables. "30 seconds left. 30 seconds left. What's your name? What name have you chosen? What name have you chosen? Cleo's Convection. What's your name? ABC Limited. This shows up everywhere. Crazy X Limited. No, you have to consider when choosing these names. If someone says you're called, futuristic. Comp Creatives Limited. Uh-huh. What's your name? Sand. Eh? Sand, like Msanyo, eh? Like that? So, you see why you on your bid forms, please write the company name on both of them. Can you please write the company? Which market? Yeah. No. Let's play this. Yeah, this. Yeah. Yeah. So have we written? Now can we turn to page 5 of our books? Turn to page 5. So like I said, we are going to the what? To the market. So what one of the things you need to so for this market, there is what we call a maximum what? Price. Have you seen it? What's the maximum price? 15 per what? Per royal. Are we together? Now you have orders. Do you see them? You have orders, you have quantities, and you have what? Terms. Are we together? The orders you're bidding for, those are the order numbers, which you also see on the what? Bid form. Are we together? So if you're choosing an order, you represent it on the bid form with the order what? Order number. Now that order has a what? Quantity. Are we together? So for the different orders, for example, order 01, you deliver 3 what? Royals. Are we together? And then that we have what we call the terms. The terms represent when you get what? Paid. Are we together? So you have terms of cash, 30, 60, and what? And 90. For cash means you get paid what? Immediately. This is very important, especially when you run the next markets. If for cash you get paid what? Immediately. Then for 30 you get paid in what? 30 days. For 60 you get paid in what? 60 days. And then for 90 you get paid in what? 90 days. In this market, when do you get paid? For all of them you get paid in what? 60 days. Okay. So for Cleos, I'm going to distribute the orders. Will they work with the numbers? And then the orders. Okay. So for Cleos, I'm giving 101 and 106. Those are your order numbers. Are we together? Then ABC Limited, your order number is 101, 102. Then for Crazy X Limited, your order number is 103 and 104. Then for Futuristic, your order number is 102 and 103. Futuristic is 102 and 103. Then for Comp Creatives, is 104 and 105. Yeah. The last one is 105, 106. Sans Limited 105, 106. So have you filled in your order forms? You have everything out filled in your order forms. You have the company name, you have the order numbers, which I have. Have you filled in? Are you paying attention? Are you done? You're looking, I know people right here. Are you done? Mm-hmm. We haven't really talked about the price. We've not talked about the price yet. We're still filling out the company name, order quantity, and the terms. We have not yet gone to the price. Huh? Are we together? So for the price, the maximum price for this market is what? 15. Are we together? 15. 15 per what? That is the maximum price. Remember, we are going to what? To bid. So, but to be competitive, we don't want to bid the maximum price. No one's going to want to pay what? The maximum price, the ceiling. So to be competitive, we are going to lower it what? A little bit, and we are going to sell our hours at 13.5. That's the price. Yeah? Pardon? Yes, for this one. The next one you'll decide. Don't worry. This is for you to practice run. Whatever you want next, you'll decide, and then you see the consequences of your decisions. Are we together? The next one you will decide and see the consequence of your decisions. Yeah. So you have 13.5. So 13.5. So how many? You have two orders. So what's the price on each order? You have you have 2 bid forms. Yeah. So it's 13.5 times 3 on each. What does that give you? So you're going to have 40.5 for each of them. Are we together? So our bid forms are all filled. Our bid forms are all what? Filled. So the maximum price is, we're saying 13.5 times 3, which is the order quantities. No, those are the terms. That's when you get paid. Because in the market here, the order 101 is 3. So 3 times, you get it? So you need to circle the terms. The terms is what? 60. Put a circle around the terms. The terms is what? 60. Put a circle. The rule. Put a circle. If you want to tick, the rules are put a circle. Are we all done? Put the total price. You're doing this together. Now you are in what? In the same company. Are we together? Because you've chosen the same company. So support each other. Make sure you have the correct things. Are you done filling? Huh? Are you done filling? So, I want to choose one representative to go. We are going to the market now. Choose one representative to go there at the market. Then all of you follow to see what happens in the what? In the market. But choose one representative, give them bid forms, and they go to the market. Market's at the back there where you see. You have to all go. But choose one representative to take your bid forms to the market, but you all go and see what happens there. For the next month, you're going to do this all by yourself. Can we all go to the market, please? Can we go to the market? You give me the order forms. Are you together? So, order 101. Yeah. So, ABC Limited rubbed. It's not very clean. Cleos is neater. Who is Cleos? Cleos that won this bid.
Thank you.
If you don't do things properly in the market, you can lose out. 102.
There should be another
There should be
102.
102.
102.
So futuristic has a number here that has a 0 and 1. So I don't know if it's a 9 or a 1. So it's not clear. ABC Limited is very neat. So this goes ABC Limited. 103.
Discount.
So
Discount.
Crazy Limited wrote 103 and 104 in the same order form, so they are out. This goes to futuristic. 104. So 104 has a very, you need to circle.
They did
Next
circle,
to
they already out.
you
They
need
did
to
circle.
So I am a very kind, very kind.
And 104
Don't worry.
takes it with a discount of
So this is going
2%.
Crazy Limited. No, I'm being in fairness. I'm being NGO-ish, so everyone. Hey, wait. 105.
You've just taken the other one without giving us.
So comms here, I really like comms. I like alternatives. They know how to talk for themselves. They fight for their rights. So this is going to comms.
All of those are
106.
Definitely.
106.
They came too late.
Who was the first in the market?
No, this one they has rubbed a bit. It's not clear. I'm going to give this to Sand. A very straight bit. I understand it's very clear. Yeah. So, thank you for coming to the market.
Either way, the harshness was serious.
Sorry. So let's settle in. We are trying to manage time, so let's settle in quickly. You see, I have been fair. Everyone has won. But for the next market, it's all going to be your what? Decisions. Are we together? You're going to look at the quantity that you have. You're going to look at the pricing. All those are going to be very important. If you don't do them well, if you don't record your terms well, you're going to miss out on. So you can go out to the market winning what? Nothing. Are we together? So now we are going back. Now we have made some what? Sales. So we are going to now move. We have our product is what? Is ready. Are we together? Our product is now what? Ready. So we are going to move product from work in progress to finished goods. You see where there's finished goods? Up there on top. So now our products are what? Are ready for what? For sale. So we have gone to the market, we have orders to fill, and we've gone when our orders are what? Are ready to what? To sell. Are we together? So now let's move to page 7. Let's move to page what? 7. You see there's what? Income what? You must remember that our balance sheet has not yet what? Are we together? Yeah. So we have to go back to it. So now we are on page what? 7. So now after moving the finish, you need to get your order forms and put them where there's sales. So that's what you've sold. Follow the steps. So you're going to now deliver. You're going to deliver these. So you're going to move those ones into. You're going to move them and put them on top of what? The sales order. But you're going to deliver only what you what? Bidded for. How many did you bid for? So one is going to remain in what? Are we together? So now can we start filling? Pardon? Yeah, we can. Or we leave it. Oh, yeah, you will give them 41. 41, eh? 41. It's 40.5, right? So they are going to pay you. She's going around paying you. It's 41. We've rounded off. So now you have a feeling of what your entrepreneurs go through. You can see. Have you all been paid? Huh? Huh? I asked you. I didn't ask if you had cash. I asked, have you all been paid? So, So what? How much? So can we fill in? Page 7. So what were your sales? They gave you 40.5. So fill in. What is your cost of sales? What is the cost of goods sold? Huh? What is the cost of goods sold? Huh? Huh? So we have different answers. We have 18. We have 24. 18. We all agree it's what? Count the chips. Can you put your hands up? To say something, put your hands up. Cost of goods sold? 18. Who doesn't understand the 18? So that what you have in your chips that you have sold gives you the what? The cost of what? Goods sold. Because that has the raw materials and has the what? The labor. Are we together? It has the cost of what? Goods what? Sold. This what? What is it? Are you lost? Do you understand? Eh? Who doesn't understand? So we are recording 18. The contribution margin. What's the contribution margin? Contribution margin is the difference between the sales and the cost of what? Goods sold. The contribution margin is the difference between the sales and the cost of what? Goods sold. So what? What is it? Eh? So 41 minus 18 is what? Huh? 41 minus 18 is what? 20? 23. Then factory overheads, how much are they? They are 2. We have 1 for depreciation and 1 for machine overheads. So they are what? 2. Do you count them? So that's 2. So what's the gross profit? Gross profit is what? 21. Yes. If no, we didn't say we said machine overheads, not factory overheads. So we have machine overheads and depreciation. Yeah. It's under machine overheads. You understand?
I think I understand your question. So in manufacturing, right, you'll find that most income statements are structured like this because they want to do the separation to understand how much are we spending to run this factory or this machine, right? But for simplicity, right, it is also okay because you are trying to arrive at the gross profit. So if you do not want to break down, you'll find so many income statements that do not have contribution margin. They move right from revenue to cost of goods and then gross profit. If you have that kind, it means the electricity is included in the cost of goods. But it is sometimes very difficult to associate the cost of electricity to 1 kilo of, say, if you're milling, right? And that's why sometimes you just see the distribution, the way we are doing it. Yeah.
And so, what's the gross profit? Gross profit is what? Selling goods and administration. Count them. How many are them? Have you put them? So operating income is the difference between the gross profit and the operating expenses. No, operating income is the difference between gross profit and the sales good and what? Administration. So it's gross profit minus sales good and administration. Yeah. No, it's just this. Operating income is gross profit minus, but here there's something wrong. You've not counted well. You should remember we paid 2 for advert. Huh? That's 6. Huh? Are we together? What is the income? What now? What's the operating income? So you have to pay for. You have one of interest. You see, you know it. So you have to put the interest there. Why it says interest? Income before taxes. Now for this particular simulation, we're not considering what? Taxes. The taxes is what? 0. What is the net income? 14. Are we together? Now turn to page 9. Yeah, so we see that it balances. Page 9. We already have. So wait. Before you move there, yeah, there is a part there we have. So there's something I need to. This is very, very important. Are we all paying attention? So we have a very important concept. I think you see that what retained earnings. Do you see it? So what are retained earnings? When you make a profit, you have 2 options. Now, you either distribute some of the money to the shareholders, owners of the business, in terms of dividends, and put some money back into the business. Are we together? It is a young business. You need to make reinvestments. Are we together? So those reinvestments that you make are what we call retained what? Earnings. So it's getting some amount of money of the profit and putting it back into the what? The business. For this particular business of ours, it's very young. We are retaining all our what? Are we together? We are retaining all our what? Whatever profits that we are making, we are putting them back into the what? Into the business. Are we together? How is the business going to grow? You're stuck. You have to? But she says in real life, you have admin overheads. Admin overheads. There's admin overheads. So those admin overheads there, whatever moving, they're there. Yeah. Are we together? So we have that table there. Previous retained earnings is what? This is our first month of operation. It is what? Eh? Income for this month is how much? What's the total retained earnings to date? We are saying we're putting all the money what? Back into the what? Into the business. Are we together? So when you put money back into the business, your capital starts to what? To grow. We started with the money that Uncle Jude what? Gave us. Are we together? But now we have sold and made some profit, and we have put it back in what? Into the business. That means more capital is going into the what? The business. Are we together? And this shall be represented to you. We are going to represent it what? To you. So that's the importance of retained earnings. So businesses take all the money they make in profit out, they end up what? Losing. Are we together? So the more you get this money and you put it back into the business, you're increasing the capital available, which then translates into cash and helps you make all the investments that we started what? Making. So if you need to buy raw materials, you have enough what? Enough money. You see what I mean? So that's how the cycle comes. But if you take all the money out of the business, then you choke it. Are we together? So right now they are going to go around and we are going to work on the retained earnings. We are going to record receivables. Yeah, but we're talking about retained earnings. Yeah, it is the money you put back into the business. No, you've made profit. And so what he's asking is asking in terms of cash and accrual. So they haven't paid you, but you register. As long as it's money coming, yeah, it's registered. Yes, it's already yours. Because you went to the market, they signed it. Now I don't know what bad debts mean. I don't know what you're talking about. I don't know what bad debts. I don't know what you're talking about. Me, I'm at this level of that. You've gone to the market and you're going to be paid. Sure deal. Pardon? Yes. So right now we've just totaled up what our retained earnings are, which is 14. So there is a section on your board which has retained what? Earnings. And they're going around to give you, and then you fill it, you put it where they've already put it there for you. Are we together? Yeah? Yeah, we filled the section. You didn't fill it? We did. There, you see. Yeah. Yeah.
But our retained earnings should have come from our own money. So why are we having retained earnings from where?
They're coming out of profits. It's a representation of how much money has gone back into the business. Like the first time we got Uncle Jude's money, we had a representation of how much money went in. Now we have put money from profits. We are making another representation in terms of retained earnings. It came from profits. So when we sold, we made sales, then we removed the expenses, and what we had in the end was a profit. And we have put it all back into the business. Yes.
And we're supposed to remove the retained earnings from this money.
No. Because here, this is what you got paid. But you got paid in 60 days. And as months go by, this has to move. It will turn into what? Into cash. It's completely different from the money that you got. So the difference is, this is a representation of how much money you put back into the what? into the business. This is a representation of the money that you're going to be paid for the order that you what? You supplied in the market.
When someone looks at your business, this is an asset. This is your money. Yes, it has a debt, not in the bank, but someone owes you. This value has to be.
We got the money from profits. So when we went and sold, this one we got money. Yeah, we got this money. Are we together? So when we got that money, we are going to pay us. But when we are recording, we record as though we have been what? Paid. We don't record what we have in cash, we record the transaction that has happened. Yes. So now when you take this 41 and you subtract this, you're going to have 14 in profits. And when you put all that back into the business, become the representation. So it is accrual and cash accounting that's confusing.
Let me talk about something here that is important related to what because he talked about valuation, right? If someone wants to know, there is what they call net book value. You get it? They just want to look at your books without looking at the future and just know the value of your business now. They will look at the black chips. It means that is the net book value of your business. It means the more profit you make, the more net book value you get. Now, of course, in tech, they have so many other valuation methods. In tech, when you're a startup, they will also consider the future cash flows, right? They will say in the future, this business could easily grow, and then they will try to attach a value of that now. But that is hot air, because it may happen, it may not happen. The minimum and tangible value of your business is the black chips, and it's the real value. The other one could actually be washed away overnight. I think you've heard stories of Jumia. When they listed, they were called several billions of dollars. Now they are almost being delisted from the stock exchange, because whatever value they got was too futuristic. It was based on things they expect to happen that didn't happen. You get it? So that's why if you're selling a business locally, because these markets, people don't really understand the future. The real value they will look at is the black chips. You get it? So it means, yes, people can value. It's important to value the future and what you've developed and what it could turn into. But you also need to look at the real value, the black one, the right now. And you have to be building that value. You get it? And that's the failure of tech companies here. Because futuristic value relies a lot on developed markets. It means usually there are so many rich people that are willing to bet on the future and pay a premium for that future. Here, when markets are still developing, the real value, right, is the black chips. And that's why, while there is a lot of buzz around, technology, many startup founders are not building tangible value. And that's why it is difficult to exit. Even if you said, okay, now I want to sell my company to Barclays, they will say, okay, what value have you created? What am I buying? Is it the software? Is it the customers? Is it you get? So it's important to encourage your entrepreneurs to say, yes, you're looking at this future value, but are you selling? I always ask entrepreneurs, you can't spend 3 years and you're not selling. All you're doing is pitching and saying the future is bright, the future is bright. Try to represent that future in some sales. You get it? And because those sales will show up in your balance sheet, and that's how they show up. Yeah.
You assume that you've what? The money that you used to pay staff came from cash. You had cash, right? That's why you took the money out to pay your workers. Now, the thing is, what we are recording here, when we are recording sales, we are recording money we have made, not money we have received. Are we together? You can make money, but then not yet what? Receive it. That's why you're receiving it in what? in 60 what? Days. But when you're recording your sales, you're recording this money as though it has been received, because you have a contract, you've bidded, everything has been signed off, and the term that you agreed to is you're going to be paid in 60 days. Are we together? Yeah. And that's why when you see when you subtract that plus the expenses, you remain with a profit. Are we together?
And one of our learning outcomes, or what I displayed here, we talked about the difference between cash and profit. You can see that we made 14 shillings, but that 14 is not yet what? Cash. So if you follow, these big listed companies, sometimes they'll make profit and then borrow to pay dividends. It means what they are declaring as profit is actually not there. They expect it, it's not in the bank. But to keep their shareholders happy, since they expect the money anyway, they can still borrow to get the actual cash, because you won't tell shareholder, I'm giving you part of my receivables. You get it? The shareholder wants what? Cash. Yes. Yeah, because that is a decision you make. Yeah, companies do. Because if you don't, usually then shareholders start to worry. And then they will rush to sell the stock. And then the value will come down. So they usually do that to protect the value of the company. Yeah.
My question is that the similar situation? Like I'm remembering when Amazon spent over 7 years when it was. Is that a similar situation? Because when it was just breaking even, is it the same thing that because they were paying shareholders at the time? Is it the similar?
Yeah, of course, if it was just breaking even, it means the sales they were making were equivalent to their costs. So they were not really making losses, but they were also not making what? Profit. But the other situation is, if you think about, I'll stop mentioning names, but if you think about some tech companies, right? No, I think we are online, right? You'll find companies that are loss-making for long, right? But they look big to you and successful. So in some cases, they are like us 2 months back. We were using cash from our uncle. You remember? Eh? Yes, we were paying staff, we were paying costs, but that was capital. So there are people that survive on investor money for such a long period of time. The question to entrepreneurs when you're asking them is, how long can they sustain that? And can this market actually sustain it? When the market is already constrained by capital, right? It means profitability is very important. You don't have the luxury to continue raising millions and millions while making losses and hope that in the future you'll make profit. We don't have that luxury, right? So you have to be very careful. And that's why it's important to understand your burn rate, to always forecast and give yourself a target. It is unrealistic to, of course, expect an entrepreneur to become profitable in the first year, right? Especially if a tech company. But you need to push them. And they need to give themselves a timeline. You get it? Recently, I was looking at a company as an IC member, not where I told you, in another place. This company raised $6 million about 5 years ago. And their income statement had $50,000 of revenue in the previous year. Now that money is all gone. And they are now trying to raise more money. You get? And they are struggling because investors are fatigued. They will buy your story for some time, but after some point, the story won't make sense. You get it? So it is really, really important that you push businesses. But there are also entrepreneurs whose goal is actually not to build viable businesses. They know that once you raise capital, you can have access to cash for some years. If things fail, you move on. Exactly. There are those we call grant entrepreneurs or fundraising experts now. Yeah? And so, and I think as hubs, right, if we do not crack the whip, that's what they call it, we are creating an active ecosystem that is not creating value. We are creating, like I mentioned, another form of NGOs, which has happened for the last 50 years. We've done NGOs. And now what we are saying as hubs is that model hasn't worked. We need to build businesses. Question is, are we building businesses that actually create value? or are we just changing the form of NGO to something there in between, right? So that is food for thought. For
So actually, I think that's my major, for me personally, that's the major issue I think. But I'm not so sure whether actually we can go into those details of the strategy of financing of organization like this particular moment. If at all we can't fit, we have something. Or even make us look past it.
So we actually have another session next week, I think, isn't it, Perez? Tuesday, which is really about fundraising and financing, right? So we can talk about some of those. Yes. Yes. Yeah, so for depreciation, because you see as a hub, you're trying to just get the best guess of where the business is, right? You're not trying to be the account. The accountant is looking at accuracy, right? An ideal accountant. Your interest is to really understand the business and how it is creating value and where it is, right? So what we encourage you to look at is the implication of depreciation. Now, the calculation of depreciation is accounting. There's what they call straight line method, and they have other methods, right? For you, now, what I'm encouraging you is first drop the accounting. Think about the implication of depreciation, right? But certainly, there are so many methods of what? Which is accounting. And like I mentioned, this is not an accounting class. We are just trying to get you to really understand the movements, right? But I'm happy to have a conversation. I'm not an accountant myself, by the way. Yeah, but I'm happy to have a conversation. Who can tell us what did depreciation do to us in this simulation so far? Who can explain the implication? Because we saw it, right? So what did it do to our financials? Exactly. If we didn't have it, what would our profit be? 15. You get it? But we need to have it there because the machine, we will have to buy this machine again. So we have to keep removing that value and keeping it in our, you get it, accounting for it in our stock.
Okay, so now we are going to go into so many discussions, and we are going to lose time. There's a lot to cover, so I want us to go to page 9. We already have practice filling a balance sheet, so let's start. Can I give you 5 minutes to fill? What you have to remember is all the information you need is already on the what? On the board. So you don't need to look further. So you're going to do the unit economics, eh? After math. Okay. Do you think we can do one math too before lunch?
Yeah, I can run quickly.
Okay.
Just run it. Yes.
Why are we still?
No, so it's saying what? Can we read the item and then fill?
Yes.
Can you read the item and then fill? Everything will fall in place. Read the item, then fill. No, that was just to show you that's not balancing. Now we are now filling, and we are supposed to see what happens now. Mm-hmm.
Receivables is what?
It's this one, 41.
41.
Mm-hmm. Mm-hmm.
Finished goods inventory 6.
You have 6. Mm-hmm.
Work in progress
0. Mm-hmm.
materials nothing.
Mm.
Total current assets. Work in progress is nothing.
Mm.
Yeah, is nothing. Here and here. Nothing. So 8 plus 41 plus 6.
Mm-hmm. 49. Hmm? Mm-hmm.
49.
55, right? Mm-hmm. Mm-hmm. Where is the 0? Put a dash, otherwise you think you've not filled it. Mm-hmm. Machines
So machines
is 19.
19.
Mm-hmm. Land and buildings 20. Total assets 55 plus 39. Total assets 55 plus 39.
This one is 39.
It's 55 plus 39. Total assets.
No, total fixed
Oh, total fixed assets is 39. Then 55 plus 39.
94.
Mm-hmm. Huh? Yeah. 55 plus 39. No. Down. Yeah.
Let me do again. 55 plus 39. 94. Okay.
So payables, we have no payables.
Payables.
There are no payables. 0.
Loans.
Loan, we have 20.
Taxes.
Nothing.
Total liabilities.
20. Capital
Capital
stock
stock.
is 60.
60.
Yeah. Retained earnings 14.
Total shareholders equity 74. Total liabilities and equities 20 plus 74.
Now is what?
20 plus 74. 94 again.
Yeah. It's balancing. It's supposed to balance. It's a balance sheet. So your total assets. So what we failed to do before, we have been able to do now, because the money we took out of this other side from the assets, has come back now from the sales. Salome. Anyone not balancing? Anyone not balancing? That's wait. Do you see the difference? We are now what? Before we were not what? Before we were not balancing. Now we are balancing. So the money we took away has somehow come back. Are we together? So what we have in terms of assets is equal to our liabilities, where the money has come from, and then the equity, which is the money that.
So have we all balanced? The ones who haven't balanced in your team, can the team members help them to balance? I'm sure there's one member in the team who has balanced. Sons Limited, have you balanced? Okay, so you can see right now, we are all at the same place, right? Our level of profit is 14. Our balance sheet looks the same, but we are now going to start running these businesses individually. We are not going to tell you what to do. You and your team are going to decide how you're going to now run your business, right? What is going to determine if you're successful is how much your retained earnings is growing. The more retained earnings you have, that means you're the market leader. Okay? Are we together? So we are going to run these businesses, and we're going to, can we all open page 11 of our books? If you finish balancing. Page 11 of our books. Let's do this quickly so that we can get lunch, right? Page 11 of our books. Are you there? You're going to see there's a market, right? And then, are we seeing that? Then we're going to start with the checklist. The checklist is just below the market. Are we seeing that? So for each team, you have to appoint a checklist overseer, right? That is going to be your CEO. A CEO is supposed to make sure that whatever is in that checklist has been accomplished. Because if you don't do that, there's something that's going to not balance in your balance sheet. Something is going to be missing, okay? So let's follow that checklist. What is the first item in the checklist? Update receivables. Before we do that, we're going to go around at the team and we're going to clear your income statement. So for each month, your balance sheet remains the same, but your income statement, you start with a fresh income statement, okay? So except for the wooden persons, everything comes off. Help them do that quickly so that we can. Ambrose. Clear all that is in your income statement. We're starting with a fresh income statement. As we're doing that, I want you to think about the kind of business you want to start running. Do you want to run a business where you're different from your competition? Do you want to run a business where you're reducing your production costs and pushing it to your customer? Do you want to run a business where you're pricing lower than your competitors just to make sure you're selling? Yeah, you have to evaluate the market and see what does your competition have. If you don't evaluate the market, so be watchful, right? Have we all cleared our income statements? Checklist enforcement officers, are you ready? I hope you've all appointed one in your team. Make sure you work as a team. So we're going to start with the first one. Number 1. Are we together? Number 1 is update receivables. Do you remember those receivables? They were 60 days. Update them to 30 days. Have you updated them to 30 days? So they are not yet cash, okay? We are going to update our loan from 90 to 60 days. Update the loan from 90 to 60 days. And as you are doing that, make sure you're ticking. Checklist enforcement officers, make sure you're doing your work for the team, okay? The third one is we're going to buy raw materials for cash or credit. You as a team, please decide. Are we together? As a team, decide. Are you going to pay cash or are you going to get a payable? What do you want to do? Whoever has made a decision, please put your hand up. Crazy X has decided. Yes? Have you decided? Okay. A payable. Okay. So they're going to come and give you a payable. Analyze your balance sheets before you make decisions. What will be the impact of paying cash? What will be the impact of getting a payable? Right? So you're buying, if you're receiving a payable, that means you're buying your raw materials on credit. Right? The term for that payable is going to be 60 days. So you'll have to pay after a period of 60 days. Is that clear? Whoever has decided, put up your hand, and the team is going to come and give you your payable. Sons is ready. Sons. So if you have bought raw materials, tick that you bought raw materials. Have they given you your raw materials? Ambrose, you still haven't given them They are both raw materials and okay. So they are coming to bring their raw materials. Which team doesn't have raw materials? Have you made a decision? You received a payable? Okay. Payable. So all these are raw materials. Tick. If you've received raw materials, please tick. And then our workers are going to start working. So the workers are now going to shift the raw materials from the store and put them in the machine. So shift your raw materials, put them in the machine, and tick that. Shift your raw materials from the raw material stock. Sans Limited. Have you received raw materials? Who's the checklist enforcement officer? So you receive that. Then we're going to load them. And then you tick. Have you done that? Have you loaded?
Yeah, we've loaded.
Have we done that? Are we all together? Can you please listen to me? Are we there? So now we've loaded the machines. We're going to pay labor. Do you remember how we paid production labor? Yeah. Can we do that now? How much was the cost of production labor? Total cost? 12. So get 12 from do you even have cash there? Are we saying we don't have cash? So now, as a company, decide, what are you going to do? Checklist enforcement officers, what are you going to do?
Who wants a loan?
Who needs a loan?
We can expect their payment whether lower most as they produce. In the real
They
world,
will strike. They are not working. They have to pay.
We work.
They have families. They need to pay for rent and
That in
rent.
the loan world, the business is traded itself.
Have you taken a loan? I see you're delaying. That was for raw materials. But now you need to pay 12. You only have cash of 8. So you need money.
Let's take a loan.
You need money.
Let us take a loan.
Guys, we can't. We used it into cash, they put it in, and we used it. Even this one.
Have you taken the loans? No, you can't. This is a reflection of your profit. Remember, you did not receive cash. This is a receivable. That was part of your retained earnings. Yeah. So you can't touch that one. When you receive the loan, please pay for labor. This team?
Yeah, you take a loan.
Can we pay attention now? Have we all received our loans? So we received a loan. Terms are 90 days. Okay. Checklist enforcement officers, please. Can we pay the laborers? Can we please pay the laborers? Can we have some order? Laborers? Pay your laborers. Have we paid?
Announce that the rates are not cash, they don't pay.
Okay. The loans are in 20. Okay. So you receive a tube of 20, and then you receive a tube of silver, which represents the cash. Have you all been given that? Have you all paid for the labor? Have you all ticked that? Let's go to the other item. Take depreciation and pay expenses. Depreciation, remember? Take depreciation. Take depreciation. Pay all the expenses. Pay machine overhead. Pay sales and admin. Have you done that? You paid? Except for advertisement. Okay? Except for advertisement. Have you all ticked?
Now, can you listen to me a second? If you have not hired new people, you don't pay recruitment and what? Yeah, so that one needs to go.
Okay?
If you have not hired new people, don't pay any recruitment.
Have we all finished? Because the next step is very important. Are we there? So now we are going to have to go to the market. This market is going to be different from what we had previously. Previously, everyone won. This market, some may sell, some may not sell. For us to be able to know if we're going to sell or not, we have to first do an analysis of the market, right? Go and survey your competition. The other tables are your competition. We're going to look at the supply. What is the machine capacity in the room right now?
Stand up, look.
Look. What is the machine capacity?
You don't have to move, you just have to look for sure.
Each machine can produce how many units? Is it 3 royals? 4 royals. But then how many tables do we have? 6. So what is our machine total in the room? Room machine capacity.
24.
Do we have finished goods? People, do we have finished goods? How many are they? So what is the total here? 30? Right? Look at your market there. Are we seeing the market? The total down there? What is the total market?
What's the total market?
25. Right? There we don't have any custom orders. If we have, we'll have to subtract them from there. But for now, this is what the market is demanding, 25. So your competitors plus you, your all total supply is 30. The demand is 25. What's the difference here? Tell me, what does that mean? Have you seen that? The market is demanding 25, you have 30 to supply. So if you do not think about it carefully when you're bidding, you might go home with nothing. And that is going to affect your net profit at the end of the day, okay? So I want you to take time, look at the market, choose the orders that you want to make, and then put up your hand, and then you're going to buy the bid forms. So you are the one to decide, right? Last month you paid 2. This time you can decide how many bid forms you want. If you want to buy 10, if you have the money, that is your business decision. It is 1 shilling. If you want to buy 2, that is your decision. I'm timing. I know. I'm giving you 5 minutes to make a decision. Are we together? 5 minutes counting now. 5 minutes counting now. When you've made a decision, put up your hand. We give you the bid form. Pardon?
The improvements will be after lunch.
Yes, after Ivan has made the presentation.
Then will be the improvements.
Yes. Yeah. And mind you, I said this is a competitive market. Your competition might be looking at what you're circling, so be careful.
Be careful. They are corporate spies.
They are corporate spies.
The second thing is when you fail, you all fail together. So you must all participate. Just to remind you, I'm cheating exams a bit. Remember what we did before? We considered the price. The price is a very important what? So think about price very well.
The price for this market is 14. Following up on Ambrose's point, can I please get your attention for 1 minute? Can I please get your attention for 1 minute? 1 minute attention. The maximum price for this market is 14. You cannot charge above 14. So be careful when you're thinking about the price you're going to put in your bid form. If I find you put above 14, automatically I disqualify you. Okay, can continue. Who has finished?
3 minutes.
Yes?
We can take all.
You look at what you have.
What you have.
Supply. You have four.
What you can supply.
Bid on only what you can supply.
Yes, we need these forms now.
You need form? Ivan? Forms?
Now which point are you using? Which bid? Which bid order are you taking? Yes. How many do we need? 2 through 2. Okay. Then 2 through 6. And how many?
You need two. Okay. Make sure you pay.
Make sure you pay advertising.
Make sure you pay advertising. Make sure you pay advertising.
How many do you want? Pay advertising.
1 more minute. Have you paid?
Yes. Wait.
On pricing. So now, remember you have to put the maximum price is 14. So the team has to decide how much are you going to charge? Are you going to charge lower than what you think your potential competition could be charging? Minimum is up to you to decide. You can even charge one shilling. It's up to you which sort of business strategy you're going to go with. That's what a business owner on a daily basis has to work. The maximum is 14. So you have to, it's a strategic game. You have to think, I have 6 competitors. Of the 6 competitors, what is the potential? Some could charge 12, some could charge 13. Maybe I go for 10, 11. You see, so you play it like be a risk taker, and that depends on number of bids.
You have 5 minutes to fill this.
Right? So, if, for example, yeah, not 5 minutes.
5 minutes for the bid.
5 minutes for the bids.
Example, this one.
So now you could say, I have 5 minutes. Why don't I take a risk? Suppose this one.
This one.
There might be potential that people will be avoiding this one and will be the only one putting in the bid. So that means we put in a bid for 201. Then that you might put it at maximum price or at maximum price. Some take risks, some be conservative. Balance. That's how you do the pricing. Hello? Can we start filling in the bid forms? 3 minutes for bid forms. 3 minutes for bid forms. 3 minutes for bid forms.
Make sure your bid forms are corrected. You're not supposed to be moving around, sir. You're not supposed to be moving around. You could get penalized.
1 minute remaining. It's a team effort. Make sure you're involving your team. Are we there? Seconds. 56 seconds. 56 seconds. The time arrives. Go to the back. Let's settle down and then checklist officers. Have you all settled down? Checklist enforcement officers. Checklist enforcement officers. We've paid for advertising. We've gone to the market. What is the next one? We're going to take product from the machine. Take product from the machine, put on finished goods. Take product from the machine, put in the finished goods. Put on finished goods. Product from the machine, put on finished goods. Have we ticked that? Make delivery. So put your bid form, where we showed you, under sales, and then supply. Put your bid forms and supply. Put your bid forms and supply. 3. Have you made a delivery? Have you made a delivery? It was 2. You made a delivery? 1. Have you made a delivery? 5. Have you supplied? You have to. We're looking for the one.
They are supplying now.
Our agent looking for. No, that's we have to cancel one of those. There's one that is not supplying.
What do you mean?
Let me see what you want first. One was bid over.
Not yet. Let me pay. But I paid someone 30 days before they move. Shouldn't they have moved?
They should have moved receivables. They did move. The receivables are supposed to be 30 days.
They moved.
Yeah, they moved. Are we there? So what is remaining now is to complete our books. So I want you to go to the last page of your book. You can either tear out that sheet or use it as is. That's what we're going to be using from now on. The last page of your book. Yes, so the one side is income statement, the other side is balance sheet. Always start by filling your income statement first, and then fill your balance sheet. So let's first complete our income statements as a team. We'll go around and make sure you're balancing, and then we're going to go to our balance sheet. So I'm coming round. If you need help, just let me know. Put up your hand. If you need help, let me know. So this is what we closed with. Right? So let's start. This one should be 94. We're going to adjust it. Yeah, 94. Remember, we closed with 94. Put 94 here because the cash is 8. Or is the cash 8? Let me see here. You can leave it as that.
It was 94.
Yeah, we'll adjust it. But let's start here. So what is your, we start with the income statement always when we're filling. What were your total sales for this month? Put that in there. For those who had point something, put round figures to make it easy for you to compute. Ambrose, can we help them to balance the books?
But it's okay. It's okay, I think, for us to have the difference. Yes, but we understand from what I've calculated.
We use our previous of 14, not this
Yes.
one.
So 14 then.
Interest of 1. 14 because we put 41. So they should use 14. Yeah. Use retained earnings of 14. Yes.
So -1.
Are you okay?
14, yeah. Can you imagine, on a serious, we are the only guys who have made those. We are the only guys that have made those.
That's 14.
No, these are the ones.
Oh, yes. We had 14. So now we have 11.
When you finish the income statement, start filling in the balance sheet.
Aren't we using the 14 we got before?
Yes. We're using the 14.
We have 11.
25. We're using the 14 we had before, okay? In under retained earnings.
Open with 14.
Yeah, okay, then
Open with 14.
plus 14.
Then minus 3. So 14 minus 3, you have what? If you finish the income statement, move to the balance sheet. Balance sheet, balance sheet. Let's do this quick so that we can have lunch. Let's do this quick so that we can have lunch. You're in the balance sheet. How much is your cash? Cash you have?
We count 41. This is 41. 60. Okay. 61, right? 61.
Receivables.
It's 61. We have
So no 30 days, eh?
Yeah.
Plus the 11, which is your net profit. The total of that is 21. Yeah, that's what brings you to a balance.
Mama, what's the total here?
Remember last month, but how many days? This is
It's as of now. So when you were starting, you were at 19.
So you have the 18 here because it has deposit, but are we paid?
Who has balanced? Who has balanced?
So when you add,
Can use the calculator there. Plus 14. Plus 14.
Did take it to Kapua.
Yes, you have to reduce.
Reduced by 1, so we have.
We're going to go around and give you adjust your retained earnings. We're going to adjust your retained earnings. Yes, we're going to adjust your retained earnings. Yeah. Yeah,
Need money to our bank.
have you balanced?
We need money to our bank.
So 11. No, make sure you're first balancing, then we know if the retained earnings are correct. Plus 52.
We are not adding to the 14.
No, you first have to make sure it's balancing, then you are going to add 4.
The
Because
14
if it's
is
not,
already somewhere here added.
no, you already had there. We gave you 14. It's there. You already added it to the retained earnings. So you're going to carry this 25. 25 is what you put here. Yeah, 11 first. Have you balanced? First balance.
But you have 11.
Yeah, we are balancing 137.
Yeah, so give them 11. Retained earnings, huh? You balanced?
Yeah, we need 20.
Sons need retained earnings.
What's the profit? What was the profit?
Okay, let's do this. The ones who have, how many have balanced? Put up your hands. Give them 20. What was your retained earnings? 20? Retained earnings. Yeah, you have 14 plus that.
What is the other portion? Which you are currently? Yes. 20 years.
Cash is 48.
You wait 1 more month. Are you balanced?
The 14.
No, there's a one that
Yeah, the one maybe you didn't count properly.
Which one is higher? Down here. Down here is lower. That means
It's easy. It's 41.
41 where?
the loans were 41.
No, the how much did you sell?
sold at
41.
Huh? What was your selling
sold
price?
at 40. Oh, we bought one bit here that we need to use there. Maybe
No, that's 40 plus that.
regardless of whether we used it or
We will
not.
not use it as a
So
first.
you say this was 40, yeah? So 40, 24. Are you 24?
No, the problem is down here. Either you have more cash than you're supposed to have.
Cash we have 48.
Yeah.
Because this one is correct. Is this
So which is
correct?
not balancing? The asset side,
The asset side is higher than the
yeah, then
liability.
it's more cash. Take out one.
Cash. Just take out one.
No, we pay the other guy.
No, it comes out.
Just comes out. In your
So
calculations,
adjust here
maybe you
is
got more
47.
cash. So
So we do
calculate
47.
47,
and
you see it
adjust.
balancing.
Have you balanced? Have they given you retained earnings? Have you balanced?
Yes.
Okay. For you, you don't. You have to reduce your retained earnings by 1. Have you reduced it?
We reduced it.
Have they given you your retained earnings? Yes. Have you given them the retained earnings? Okay, as you're receiving your retained earnings, can we do a quick debrief before we go for lunch? Just 5 minutes. So, Sons, what is your net income? Sons Limited, what's your net income? In period, in the month? 20. What is your retained earnings, cumulative? 34.
Please pay attention. Please.
Comp creative? Who is comp creative? What's your net income? 6. Retained earnings? What's your retained earnings? 20. Cleo? What's your net income? Just go to your income statement. It's all there. Last page. What's your net income? What profit did you make? Retained earnings? Cumulative? 25. ABC? Who's ABC? Yes. What's your net income? 11. 25. Crazy X? -1. And then your retained earnings? 13. Futuristic? Negative? -3. Retained earnings? 11. So do you see what has happened with this market? We all started at the same level. Some are market leaders, some are lagging behind. Right? Yeah, so the next market, you never know. That's why we're analyzing this. So we want to see what strategy did SANS use that we can, again, in the next market, counteract, and maybe we can also be the leaders in the next market, right? So let's ask SANS, what price did you use? What price? What was your price per unit? 12. The maximum price was 14 in this market. You decided to price at 12. You went for the highest order, I remember. Order 201. Were you alone at order 201?
No, we were two.
You were two.
Advertised more, so we
Okay. So you lost more on advertising. So they spent advertising 3, I remember. You spent 2. Right? This one spent 2. So you see what happened here? And why these ones lost? So sometimes you might find you in the market, you are at the same price, but because of something that, an advantage that the other team has over you, they take the bid and you end up losing. In future markets, we're going to have options where you can outcompete them just by having something different than them, right? But for now, they sold at 12, and because of that, they were able to make a net income of 20, and their retained earnings went to 34. How many units did you sell? So they sold at maximum 5 units. They sold all their units, right? And they made a profit. What about competitive comp creative? What was your selling price? 10. But how many units did you sell?
4.
You sold only 4 units, right? So you had another order, but you could not deliver, right? You had one, but you could not deliver. So that one was automatically cancelled to make sure that the market was remaining competitive, right? What did you spend on advertising?
3.
You spent 3 on advertising, right? So had you, for example, chosen an order where you could sell, probably deliver 1 unit, this could have changed probably. Maybe you could also have been with these ones here. But they charge 12, you're charging a lower price of 10. So look at how you're also playing your pricing strategy. Are you seeing that? Right. Cleo? Who's Cleo? Yes, Cleo. What was your selling price?
12.5.
12.5. You're selling at the highest price.
No, the highest is 14.
Yeah, I mean compared to these ones. So SANS was selling at 12, Comp was selling at 10, you went to the market with 12.5. But then you made a net income of 11. How many units did you sell?
3.
3 units. How many bid forms did you put in? 2. So probably had you been more of a risk taker, put in more bids, that gives you an opportunity to, get in more, you can sell more units, right? But you find someone has outcompeted you in the market, you're out of the market, and the other orders you can't be able to bid for. So probably that's what happened, right? Did you sell 1 or 2?
Sold 3.
No, I mean the bids. 3 for 1 on 1 bid. That means the other bid you're outcompeted by someone else. So probably the pricing could have also, maybe you were charging the 12.5. Was it 12.5 constant or?
No, we had the same price, but they advertised better.
So you were still charging the 12.5. That's why the others were able to outcompete you. Are you getting what I'm saying?
On the one where we paid, we charged the same, which is 12.
Advertising. Okay, you competed with SANS. Okay, clear. Okay, so SANS outcompeted you. ABC Limited, what was your selling price?
12.5.
12.5, also one of the highest prices in the market. How many units did you sell? 3 units. What did you spend on advertising? 2. So you charge 12.5, but you only sold 3 units, probably because you only had 2 bid forms, right? So one of them you were kicked out of the market. Potentially there could be others you could have bidded for that you could supply, but you didn't take that risk. So because of that, you ended up with only this. So try to take more risks, that's what I'm saying.
But the other person was biased, the one at the other end.
The one who put in. No, but even though, still, if you had more orders, even if they kick you out of the market, you still have been able to order or supply or bid in another order, right? The last one, crazy. Let's look at these 2 cases here. Remember, we all started at 14. These ones achieved a profit. These ones did not. Why? Those are also learning cases. Price? What was your price?
We had 2 orders.
Uh-huh.
One, the price was high, another one was low.
Which order won?
One was 10.
10. So 10 shillings was one. The other one was for how much?
12.
12. So the 12 was the one which you did not win. 12.75. So you went for the highest, but still lost, probably because of the pricing. Someone went to the lower bid, right? How many units did you sell? 2 units. What did you spend? What did you spend on advertising? 2. So you see what the trend is. These ones are spending 3. Are you seeing? Can I get your attention? Sans is spending 3 on advertising. Comp is spending 3. You guys are spending 2. So you're going with few bid orders to the market. So you automatically, after you've lost the 2, you're kicked out. There are some orders that were going to China that could potentially have bidded and be the only one and won that order. So that makes you remain with a lot of units in your inventory. So that's a strategy you could use next market. Knowing that you now have, how many units do you have? 2. That other team, Crazy, how many do you have? 3. The rest, like Sans, have all sold their units. So they'll go to the market with less finished goods. You will go with more in the next cycle. So be strategic on how you play the next market. Are you seeing that? Yes. Let's finish with the futuristic. Yes? Your price was? 12.5. One of the highest, too. How many units did you sell? 1 unit. What happened? How much did you spend on advertising? 3. You spent 3. What happened? Did you all price at 12.5? So you all priced at 12.5. You didn't vary them. So next market, look at that, right? So if you're pricing at the highest, there are chances that someone will automatically come and outcompete you, right? So try to vary your orders. Play with the market. So having this knowledge, can we best prepare for market 2? Yes. Market 3? Right? So that will be after lunch. We'll have a presentation from Ivan. And then we're going to do market 3, which will be our last market. And then we'll see how that goes.
Perez, could you check if it doesn't seem ready, so I could use 5 minutes? Yeah, so maybe we can have a conversation around what do you think, based on this, are the drivers of profitability then? Pricing? Sorry. Okay. Pricing, what else? Advertising. We'll discuss that. The costs, right? Very important. What else? Luck. Strategy. Okay. You put luck. Add luck. Luck. Luck and strategy. What else? What else? Luck.
Define luck. Luck is one of the tools in your arsenal. You can access it for you.
Yeah, so maybe we can reflect on this. So someone said luck. And luck is something we can't do anything about. And that's why they call it luck. Right? So the things you can't control shouldn't bother you. Because even if they bother you, you can't control them. So then you focus on the things that what? That you have control over. Right? So luck, maybe, but it's not our concern because we have nothing to do about it. Right? Strategy. Who has the simplest way to define strategy? Who can define strategy? What is strategy? What does that mean? How you intend to achieve something, yes?
I think it's how you think through different scenarios.
Mm-hmm.
Determine which one is the best to work.
Yeah.
How you condense information, sets of information from different data points.
Mm-hmm. Mm-hmm.
I would define it as
Ambrose, you're not writing.
tactics. The different tactics
Tactics.
you use based on
The information, scenarios, tactics.
the prevailing market functions.
Okay. Tactics based on the prevailing market. Yes.
The action you take to achieve a certain goal.
The action you take, right? So, in my view, these are all correct answers. And what it means is that strategy is a combination of so many things, right? It is you condensing, using information, like she said, analyzing that information to inform the tactics, right, that you develop, to inform the decisions or actions that you take based on multiple what? Scenarios. So all right answers. So it means that for your strategy to be good, you really have to have sort of what I would say an ego. Is it the ego that has sort of a wide sight in terms of how much it is able to see? At the same time, you need to be able to see almost every angle of the business for your strategy to work. So it is marketing, it is finance, it is people, right? So you need to understand all those elements and forces that are that you put together, right, to build the business and to run it. And you need to have your eye on all those things, right? Which is not an easy job, right? And that is why it is important to have a dashboard. You need to have one place you can go to and have an idea of what is happening in the different places. I'm saying idea because you not know the detail, but you know enough to make a decision. In my view, there is no better place to go. If you are not able to build your customized dashboard, because that is one option, right? Where you have someone develop a dashboard that pulls information from so many different places and all that, which is not very practical in a startup. The easiest place to go is financial statements. For me, I look at financial statements as a dashboard. When I look at a business, I'm able to tell a story about that business if I look at their financial statements. Because in financial statements, every decision that you make will show up there. When you hire, we've seen what happens, right? When you go to the market to sell and advertise, we've seen what happens, right? When you develop the product, product development, software development, you see what happens. So every decision you make has two directions it will take you. Either you're losing money, right, at that point in time, or it is coming back, right? Every decision in business ends up in those two directions. Even if you decided today that I'm going for a meeting, already there is a financial implication. So it is very important, if you're going to support a business, to have the basic understanding or knowledge that allows you to interpret financials, right? Because of course people will tell you a lot of things when you are having a conversation, right? But what they tell you may not be the reality. And the idea of financial statements is that they are supposed to be historical or forecast. So if you want to know what has happened in the past, you can just look at what? The statements. If you want to know what is likely to happen in the future as well, then you do what they call forecasts. Isn't it? Now, as hubs, I don't know if you're having the same experience, but usually when you ask for financials, in most cases you're asking for audited books of accounts, right? And I found those to be very unreliable. Very unreliable. Because in most cases, someone will get someone and say, they have asked me for audited accounts. Please give me something. You get? I'm better off looking at management accounts, right? That are not very accurate, but they are sort of a bit genuine. And they are being prepared. Yeah? So management accounts is basically accounts that are prepared by the entrepreneur. Yeah? No, that may be too detailed. But when they present financial statements, you get it? That are being prepared by them, unaudited. No external party has looked to them. Then looked at them, then we call them management accounts, right? If someone has looked at them, called an auditor and stamped, then we say they are audited. I actually find the management accounts more reliable than the audited accounts, because at least even if they are forging management accounts, they have to sit themselves and think about what to forge. Huh? When it comes to audited accounts, it's someone else who has no idea about the business thinking about what to forge. So at least the forger of management accounts is better. That is one. Secondly, when someone presents financial statements, usually I ask for a ledger to back up those statements. And in the ledger, I'm basically looking for the source. Yes, I know the financial statements, like we see here, is the result of so many transactions that have happened. So for me, usually I ask for the what? For the ledger, or for those transactions in whatever form, whether it's a cash book, whatever form. Because if I'm able, and in some cases, if they don't have, which happens a lot, someone will say, I've not been keeping records, now I've learned, I'll be like, okay, at least give me a bank statement. Because in a bank statement, I can at least see, if you are saying you're selling so much, I can at least see some transactions. So if you tell me you're selling 200 million, and your bank statement has irregular deposits that happen once a quarter, then that shows something, right? And so this information then allows you to have a conversation, right, with the entrepreneur. And your job is not to reprimand them. You get it? It is to make a decision, first of all, for yourself. Because if you are investing, then you also have to protect yourself, right? If you're investing, whether it's a grant or whatever, it is investment. You want to see some results. Then it helps you make a decision. But if you're supporting the entrepreneur and you want them to grow, then you can have an open conversation about it. And say, you know what, your financials just have so many gaps. Either you have historical records. If you don't have, starting today, please start to keep records. And this is why you should keep records. In any case, if you forge, other people will know like I've known, or like I've guessed. If I'm not trusting your financials, there's a likelihood other people will not. So you better start what? Now. Because that's a real problem in the ecosystem. And again, like I said, you cannot convince me that you're running a business, right? And you do have no idea how money is moving. You have no idea. It's just not possible. So I think if we can incorporate a bit more of this finance in our programming and put a bit more emphasis, right, on it, what we are going to do is build better businessmen, right? Better businessmen. And some people always give an excuse of Chikuvo people, right? They say, but Chikuvo guys don't know their now. That's not true. It is actually not true. Those guys intentionally do not have. You get it? If you go down there, you'll find everyone has a book, first of all. They are writing the transactions as they happen. They do not have an Excel sheet, but they have a what? A book. That's one thing. Secondly, these guys know what they call unit economics, and we'll talk about that after lunch. But if you ask him, how much do you sell? How much does it cost you to make this thing or to ship it from China? Those guys know those numbers. They do. In 2019, I took a trip to China to do nothing but to just understand those Chikubo guys. And I can assure you, those guys can tell you every cost from shipping in China to their shop. They know the cost. So when they are pricing, they know how much they are making on that one what product. Now, if at all someone fails to keep the records and they have perfection or understanding of their economics, that person is better off. And it's possible that that person will survive, even though they do not have very good what? Records. Because at least they know I'm not losing money on a unit. Because like you see, if this royal costs 6 and you sell it at 5, it doesn't matter how many royals you sell. You can sell 1 million, but you'll still be losing what? And there is a company here that does that. There is a company here that does that, but for them, their hope is that we'll do that. We are using investor money. We'll cut out maybe some competitors, and then in the future, we'll stay alone. That may be their strategy. But is it sustainable in this market? No. Maybe not. You get it? So that company looks like it's selling. You get? They will report so much in sales, so many orders, right? You'll even probably see their billboards. But because they are losing money on almost every customer they get, they will never survive until that changes. They will either run out of investor money, and what happens? They close. So it's vanity. Capital without profit is vanity.
I have another question.
Yes, one last one. I think our lunch is ready.
Yeah, so when you discuss strategy, sometimes companies do that because it's a strategy. And I understand that sometimes you need to put a time because there are some companies which decided intentionally not to market.
Yes.
Because they know this market, the way we see it, that it's a market which is a bit narrow, but it's also price sensitive. So it's not a weakness of price.
Yes.
And they decided to use the price as a marketing tool. Today you bring out something and it's low cost, even without talking about it, everyone knows about it. Because it's a low price. Now, and later it turns out to be that actually, as they are getting these customers, you start to like you reach economies of scale, which starts to talk a different language to either your supplier or whatever, and then the profit story or your partner that we discussed. So my question is that what do you think about this strategy? Because they are also coexisting.
That strategy survives on capitalization.
Yes.
So if you're going for that strategy, you also need to assess your ability to raise capital to sustain you until you kick out others and you are able to price higher. Like I said, pricing below cost never gets you profitable, irrespective of how much money you get, how many sales you make. The only way that strategy works is you are saying in the next 3 years, all I will do is sell at a loss. And my strategy or hope is that by doing so, I'm going to acquire so many customers and others will get out. Warid tried that, I think, former Airtel. Orange tried that, right? And you have to get to a point where that changes, where you get sort of to a point where you can outprice your costs. If you don't, you end up like Warid or Orange, where you have to exit the market. It fails. Then you lose all that what? Money. Investors go home, everyone goes home without anything. So you have to assess your what? So if you are not Orange, if you're not Africell, if you're not Warid, you need to be realistic around your capitalization. And in any case, if you go for that strategy, then you have to invest in building your capability to raise what? Capital. All right, we'll break for lunch and then we'll be back. How long? How long is our lunch? It is 13 minutes to 2. Let's be back here by 2. more exciting elements. I wanted to just talk about unit economics. Shall we settle down? All right. When we say unit economics, who would like to talk through what they understand by unit economics, or what they would expect when someone is talking about unit economics? What does it involve? Or if you, yeah, please.
So, the way I understand it is it's reasoning the whole business in a unit perspective. How much per unit, how much you sell it, per unit, how much do you have, per unit, literally, if I know you get all your here and there,
Yeah.
and try to reason it for a single unit.
Yes.
I know you are manufacturing, how much are you paying for electricity per unit?
Yeah.
How much are you paying for all those kind of things, but in a unit perspective
Yeah.
of your products or something?
All right. That is actually accurate. Why is it important? Why is what he just mentioned, why would it be important? Yeah. Exactly. Right? And unit economics, if you talk to most investors, is one of the things they focus on when they're engaging with businesses or when they want to understand businesses. It's actually one of the reasons most investors will say no. If anything has to do with financials, the main reason they will say no is if your unit economics is what? Is wrong or is not viable, right? You can have, bad historicals. Maybe you've been making losses. You can talk about how that is going to change, right? And the changes you're making, right? And as long as the unit economics are positive, it is going to be easier for them to believe you, right? If the unit economics make sense. But if your unit economics do not make a lot of sense, right? Then it becomes a challenge. If you've been losing money and you have not changed, like I said, on one unit you've been losing money, nothing has changed yet, and then you go to this investor, they will have a particular interest in that to understand why and what would change, right? So it is very important that as you talk to businesses, one, of course, you try to understand their unit economics, because that is the baseline, right, when it comes to financials, positive unit economics. But also, it is the quickest way to get a financial perspective of a business. Because, this P&L is a bit detailed. You have to look at so many things in it. And you're dealing with big numbers. So they may confuse you, or they may not be easy to engage in a conversation, especially if you don't have a lot of time. So usually, investors will will ask quite a lot of questions around that, right? But the other thing is that if a businessman or an entrepreneur has a strong understanding of their unit economics, then it is very likely that that person understands the business to the letter. Strong understanding of unit economics is very close or almost equivalent to a strong understanding of the business. Because if you understand the unit economics, then you know where the profit drivers are, where your value is coming from. You know again where the costs are going at a unit level. But also, in most cases, the unit you're looking at is actually the center of value creation. And we'll look at that shortly. Sorry. Yeah, so we talked about unit economics as basically being an analysis. You're analyzing the company, but based on one unit. So in this case, what would our unit be? What could our unit be if we wanted to understand our company or this business we've been running? Yeah? One royal, right? Which is this? So before we confuse ourselves with how many royals to sell and all the details, we need to understand every detail about just one royal, right? What else? What other unit could we be interested in besides the royal? What other unit? Yeah, the raw materials, of course, which are related to the royal, right? Customer. Customer acquisition is a metric, but the unit is the what? The customer. So sometimes you want to understand one product, but it is also important to understand one customer. Because if you understand one customer very well, then you know what it means to have 1,000 customers, right? Because if you're losing, you know you could make money on one product, but lose money on one customer. Is that possible? How could it be possible? Maybe someone can give us a scenario. You're making money on one product, but when you try to understand the customer, you find that you seem to be losing money on this one customer. Maybe someone could give us a scenario. When you think about one product, the economics make sense. When you think about one customer, they are not making sense. What could be wrong there? What could lead to that? Mm-hmm. Yeah, that is true. Mm-hmm. Yeah. Hey, please break down the language. He's saying CAC. Exactly. High customer acquisition cost. You get it? The cost of acquiring one customer is very important. Because remember, you spend money to acquire me as a customer. You'll market, you'll come and meet me. You get, you'll even take me for coffee. And then, okay, I accept. Then I start buying from you. But what if after acquiring me, I leave after 2 months? And the profit you've made from all my purchases within the 2 months is more than the money you spent to sell to me. Would you be making sense there? It means every time you make a customer, you're actually losing money. Customers become actually a disadvantage, your downfall. You get? Because every time you get a customer, you're immediately going to lose money because the cost of acquiring that customer is more than the value you're going to get from them over their lifetime. Maybe one more unit that it doesn't have to do with the company we are running or the business. What could the unit be besides a customer and a product? What else? Churn is a metric, but unit. Churn rate, right? The loss is a unit, is a metric, but what I'm talking about units. Yeah, staff, right? You may want to understand the economics of one staff. That is important in microfinance, right? Where your loan officers, if they are not managing enough loans, right? You could be losing money because you pay this loan officer money. So he must manage a certain number of loans for it to be what? Profitable. So a staff could be a unit. The last one could be a branch, right? For those that engage in, like banks, although those business models are going down, but a branch could be a unit. So it's important for you to identify the right unit, right? And that unit depends, the importance of a unit depends based on the business model, right? In terms of how you create value. So like I said, in some businesses, the branch becomes very important, like banks. The day they open a branch, they have to understand all the economics. And they even give their sort of targets for the first manager are going to be around that. When do you break even? How many customers do you need to break even? All that, right? Yeah. So we talked about why it is important. Of course, it's easy for you to understand how to improve your product, how to improve, make your market access sustainable. Once you've understood the unit, then of course you define the metrics that are important to you. Yeah? And these are some of the metrics. Gross margin per unit, average revenue per unit, lifetime value of a customer, and customer acquisition cost. These are some of the other two, lifetime value and customer acquisition cost, are most used in technology. Yeah? technology businesses, those are very important. Because you see, a technology, in most cases, if you have, say, a solution, software, it's about how many users you can get, right? Now, getting those users costs money, and those users are going to drop off at some point, which he called churn rate. You're going to lose them, right? It is unwise to think that once you acquire a customer, they are going to stay with you forever, even if you are the best. Unless you are the only what? Alternative. But if there are other alternatives, right? An alternative, I don't mean another person. It could be another product. You get it? That's why the solar industry has struggled. They felt they were so, it is the first solar home systems, Africa, they have never seen them. But they didn't know they were competing with the candles and all these other solutions. You get it? So it is always important to understand what the alternatives are. So once you've defined the economics, in our case, what do you which metric do you think would be very important for this business we are running? Of these ones that we have, the obvious one, gross margin, right? The gross margin per unit. So essentially looking at this royal, how much has it cost us to produce, and how much are we making from it, which is the price, right? Revenue at a unit level could be price. Not always, but it could be what? It could be price, right? In this case, if you have multiple customers, you could also be interested in average revenue per customer. Especially in e-commerce, that is important. When someone logs in, you need to have an idea every time, and even find ways of making sure they purchase to the level you expect. And that's how you structure your adverts, the things you show first. You've seen that, right? They will intentionally show some things first that maybe give them more revenue. It's like that even if you bought one thing or two things, at least they hit the target of average revenue. Of course, once you understand the metrics, then you calculate, right? So I wanted us to calculate some of these metrics in those books that I've given. Just the next page. Unit economics, the next page. So the first metric we are looking at is gross margin per unit. So this is the formula. Easy. We are looking at the average selling price or the selling price per unit. We are removing the direct cost per unit. In some cases, that will be called variable cost per unit, right? And then divide that by the average selling price per unit and present that figure in percentage form. When someone says margin, they expect a percentage. When they say gross profit, they expect a number. Are we together? So, what is our... Let me see. Yeah, we want to calculate our gross profit margin. And if you turn to the next page, you see that we have to first find the direct costs, which is an input into that formula. We find the price, which we already have, and then we can calculate. So what were our direct costs per unit? Per royal.
So that means that you don't calculate the factor over the machine overheads and depreciation.
For now. What is the cost? Yeah, it was 6, right? Now he's asking something important. He's asking if we should add the overheads here. Ideally, yes. Because they are variable, and every unit you produce could increase your what? Although in our case we had a standard number, so every month we are producing 4, meaning the overheads are not really changing. But ideally, like we said, overheads are fuel, electricity. If you're a miller, right, if you're running machines, the more you run them, the more overheads you'll have. So our unit cost then becomes 6 point whatever it is, right? Because there is a 1 divided by 4. Is that 6.25, I think? Yeah? Okay, so we are going to fill that together. So the product, you could have multiple products. It's important to understand each product on its own. So product 1 for us is royals. That is product 1, royals. What was the first input? What was the first input? Raw materials, right? So the first input is raw material. How much did the raw materials cost? 3 shillings. So you write raw material up and then you write the 3 shillings down. Yeah, raw material under input cost 1. Where you have input cost 1, put under input cost 1, that is raw materials, and the value is 3 shillings. What was the other input? Labor, right? How much was that? 3 shillings. 3 shillings. And then we are saying the other input is what? The machine overheads, which is 1 divided by 4. So that becomes 6.25. That is our total direct cost per royal or per unit. Yeah? The last part. So, yeah? Machine overheads. We said. Which one? What is standard? Let me explain that. So we said we are spending 1 shilling on machine overheads, right? Which is a direct consequence of the manufacturing process. If we were not manufacturing, we wouldn't have machine what? Overheads. You get? So if we want to know the machine overheads per unit, what do? We get the 1 divided by the number of units, which is 4, right? Which is the 0.25. So this 0.25, if we add the cost of labor and the cost of raw materials, it becomes 6.25. Isn't? Are we together? What was our price? Everyone should put their price, because we want to know the margin for each person. Put your price for the last. Then we see who had the highest margin. Just use the average, average selling price. Yeah? Average selling price, get the total revenue, divide by the number of royals you sold. Total revenue, which you can read from up, divide by the number of royals you sold, not the ones you made. The ones you sold. Yours was 38. Divide by 3. Total revenue divided by the number of royals you sold is your average selling price. Is that clear? You sold how many? 2. At what price? Value. Total price? 20. 20. It means on average each went for 10. Is that clear? Are we clear on it? And put it in percentage form? Yeah? So the formula is there. Get the average selling price you've gotten minus the 6.25 we got. Divide by the average selling price. And multiply by 100. 0.25. It was 0.25. Get the percentage. And put it there. Then we see. Ambrose. Let's work on this thing.
And the margin is this. This is percentage margin. Which margin are you?
Gross. There is something there that is confusing. The second last column has gross profit per unit. So that is the average selling price minus the direct cost. That is the gross profit per unit. So that number, yeah?
What is the total revenue?
They don't know. They don't know. Show it them.
I just want to share with everyone. They're saying the total revenue for that 40 plus 38.
No, we are looking at revenue for 1 month. Don't add up the previous month. Just one, the last market. The revenue made from the last market. Oh, that is margin. What you're calculating here is this one. This one here is up here. Okay, this one. Average revenue pass.
You don't have to
This one.
press this one.
This one. Get them, eh? They're too busy.
The number of royals each one.
The total cost per unit, we added all these.
Average, this is it, eh? Gross profit is this minus this.
Yes.
40. Then this one divided by this.
Total area.
I'm a bit stuck also. This is 38. 38.
Average selling what?
Divide by 3. You get 12.65.
Your input. You have raw materials.
12.6. Then gross
Looking at what you sold.
is
So the raw material was 3, then minus 3. What's the third one? That input cost is manufacturing. Manufacturing of
get
So you paid one but you produced you sold 3. No, you produced 4. You sold 3 but you produced 4. Yes. So it's 1. You get it? This is very nice. If you took this by 6. Okay. So this is 0.5. Okay. Did you get this?
You had gotten 0.5.
You get
You got 12.
You get it?
Okay. Manufacturing 12.6 minus
This is fuel, power, everything.
divide by
But for that one, you are able to produce 4 oils, which is a much better
12.6. Oh,
So you get 1 divided by
12.6 times 100. Okay. Right, what mass? So that hello. Code mass. First thing that I know, 6.25. No, so you put that 6 divided by, you get 6.25 is 1.6. Okay. Times 100. 50.3.
So is this 50%?
So it's 50.4. Yeah. Yeah, 50.4%. Why are you getting the 0.5?
I haven't multiplied by 100.
Yeah.
So it was 504. And per 100, I'll still get 50.4.
It's just this. This divided by this. Then you don't have this. This one is, they said it is the average selling price, which is 12.6 minus the total direct cost per unit. This one. So it's that minus this.
Are we all together? Let's get the results and compare. Ambrose. Oh, it's okay. It's okay. Let's get results. Sons, what is your gross margin per unit? Sure. In percentage? In percentage? 47.9, eh? Okay, let's say 0.9. Comp, creative, are you ready? Not yet. Cleo? 50.39. ABC? 50.39. Crazy X? Crazy X? 37. 37, eh? 0.5. Futuristic? Yeah? 50%. Comp, creative? Three. Okay, let's pay attention now. Let's reflect on these numbers. Excuse me? Let's understand the meaning of these numbers. You can see that ABC and Clio have the highest margin, right? I don't know, I think they're done. At 50.39%, right? Followed by Sons at 47.9%. And, 50%, 47, and then the 37s come in place. Now, given that we have the same cost, you can see that the people that had the highest price, right, have the highest margin. Are we together? Because we have the same cost per royal, the people that had the highest price have the highest what? Margin. The highest average price. Right? So it means, in another word, if our costs were different, the margins would also vary based on what? On cost. So the two things that determine your margins are your price, right? Or revenue per unit, and the costs per unit, the direct cost per unit. What does having a higher growth margin mean? If for example, if we compare let's compare Crazy X and Futuristic. What does this mean to them if they are head-on competitors? How would you advise Futuristic against Crazy X? They are worried about competition. You look at their numbers, you do research, you find they have what? Higher margins. What would be your advice to them? They are competing, same product, no differentiation, like Airtel and MTN. Yeah, say it loud. Advertise more. That is too Futuristic. How would that change? How would that give them advantage? Or why are you saying advertise?
They sell more units.
Mm-hmm.
And of course, if they sell more units on a better profit, they make more money.
They make more money. Okay. Remember, we said Futuristic is likely having a higher what? Price. Because they have a higher what? Margin. So if someone has a higher price, he's saying that they need to advertise more. Right? Now that may be true that they need to advertise more in comparison. You get? And maybe the idea is that because, of course, it's customers will run to the person that has lower prices, right? So if you're advertising at the same rate, the chances are that this guy will certainly have more clients because they are already advantaged against what? So the only chance you have is to get customers that don't know what? Crazy X. So that's the only way advertising could help you. But is it a smart strategy? Okay, who else? Yes, Perez. Okay, so who is that? Futuristic. Exactly. So these guys have the opportunity to still lower their what? Their prices. And their customers who probably do not know are not very familiar with Crazy X will be happy, not knowing there is even a lower what? Cost alternative. Those customers, you may get more royalty from those customers, right? But generally, it should improve your competition. You still have advantage to lower. You could also give more discounts. Yeah? You have room to give more what? More discounts. Yeah? You had something. Sorry? Very good question, and I was going to come to that. Because that is very debatable and varies depending on the industry. Right? If you are, say, in dental is not a high volume business. Because even if you advertise how, you never get high volumes. Is that true? It means when you get one customer, huh? That is true, but still, unless something is existential, they will fear the dentist. You get it? These cleaning things, people won't come. What that means, exactly, right? Even myself, you get it? I've been having a problem for a while and I'm always lazy to go. But what that means is that when I go, this dentist should thank God and say, thank God you have come. You get? And make sure the 3 times I would have come, he gets in what? In one. So that guy's margins have to be as high as possible. In fact, they range from 80 to 100%. They can never be beyond 100%. I hope you know that. But they range from 80 to 100. The margins. So that is dental. Now, what is a high volume business? If you're selling maize, or maize, or you get it? Something that is like food generally, usually, not all food though. The margins, right, cannot be high, first of all, because of too much sensitivity. That is one. But also, your goal there is you have opportunity to get so many volumes. So you can afford to get slightly lower what? Margins. So your strategy, if you have low volumes, low margins, and you can't get high volumes, then that's a problem. Because the lower the margins, the harder you have to work in terms of what? Volumes. So every time you lower your margins, just know you have to work what? Harder. So you just have to find a balance, because high margins could also mean lower customers because they fear price. Yet too low margins could also become a what? So you just have to balance and find the sweet spot. And what is important is to know how much do you need to sell to actually cover your costs at least, which is what we call break even, and we are going to look at that. Right? So this is very important. Now, I always give an example. There is a bank. Again, I won't mention names. But there is a bank, I think there is a time they changed a CEO. And if you look at what changed in that bank, what this CEO did was basically to analyze the customers they have. They segmented the customers. Said, okay, which customers do we have? We have Ascari type customers, we have corporate type customers, and then we have companies, right? And then what they did was to analyze, say, when we sell an account as a product to an Ascari versus a corporate guy, how do the numbers look like? And this guy realized they are losing money on askaris. And that is because these guys, even withdrawing money, to withdraw 10,000 shillings, they will also go and line up. By then, you get it? They will also line up. The same time this guy the teller is using to serve someone who is withdrawing 10 million. Is the same time she's using to serve someone who is withdrawing what? 10,000 or 1,000 by then maybe. So what this guy did was to increase the limit on ATMs. I think by then it grew to about 5 million. Anybody, whether Askari, whatever type of account, you can withdraw up to what? 5 million from the ATM. And he said, I do not want to see anybody withdrawing 10,000 from where? The counter. And in exactly, they increase the what? The charges for withdrawing on the counter to make them prohibitive. Right? They close some branches and put more ATMs. So if you have a branch where you, like let's say in Quen or Paris or wherever, where you know definitely most people here are either civil servants or askaris. You get? You put more ATMs and close the branch. You get? Because then he was like, I would rather either increase the margins on those guys, right? Or reduce the volumes intentionally and focus on the what? On the guys that are giving me more margins. Now that is working smarter, not harder. That was his strategy. Someone else could have come in and said, we need more customers, open more accounts, make the accounts cheaper. That could also be a strategy. You get the difference in strategy. So if you know your numbers, your strategy is a bit more informed rather than feeling, or I feel like, or surface level analysis, where I feel like I see a lot of people downtown. I think this business could work. All right. Yes.
What kind of experiences around the benchmarks between, and it may vary by the industry, it may vary by the customers, but what is the kind of your benchmarks between the play between cost, the margin, like the benchmarks, be like e-commerce, this is what costs according to the industry.
What I know is the dynamic, what I call dynamic businesses. Tech I'm still understanding, right? Because you see, because it has rapid innovation, the efficiencies could change easily, right? And go so over the benchmark. But with dynamic businesses, what I call brick and mortar businesses in this country, right? In most cases, if you have below 30%, you need to look very well at your numbers and your strategy and the model.
So, and in that case, you're looking at the brick and mortar. Okay, by the it's such a big asset category.
Yeah.
Looking at it's not approaching the whole market.
Yeah.
Just concentrating on a given
Exactly.
segment.
Yeah. Below 30%, you have to be very what? Careful. You're shaky, you're vulnerable. By the low margins mean vulnerability. When the economy is tough, those ones are the ones that get wiped out very easily. Low margins. They make you very what? Vulnerable. Because you need more volumes, and when the economy is tough, you get it? Like our guys who sell land, now they are struggling. So if you didn't make as much in the previous times to store, you're vulnerable. You get it? Yeah, true, exactly. Luxury goods as well.
When the economy is tough, people start.
Exactly, your vulnerability, even if your margins are higher, it could be. So you need to understand also where your strengths and vulnerabilities are, especially now that we've all experienced COVID. You get it? Because before then, we could not think of something that could go to that extreme. But now it's about understanding it and build what they call. This is not part of the curriculum, but I will encourage you. It's not easy. Like I said, if you're supporting businesses, have empathy. Have empathy. It is hard. So all these things we are saying are not straightforward. That is the honest truth. They are not what? Make sure you have empathy. Be patient with businesses. Work with them, right? That especially local businesses, work with them. These guys have so much pressures. You leave school, your brother is calling school fees. Your father is saying, thank God you've graduated. You get it? So many pressures. So when you are supporting a local entrepreneur, when I have a local entrepreneur and an expat entrepreneur, I treat them differently. Because my expatriate friends, they have a credit card. Nobody is calling them for school fees. They can afford to take certain level of risks. And their behavior is different. Right? So it's important to be patient and give people chances. The challenge is if someone is not learning, that is a problem. You get it? So if someone comes and they have no books, that is okay. But if I give you feedback and I don't see direction, then that's the problem. Yeah? So anyway, I was going to say there is something called reserves, which again is very difficult in this what? In this market. But if you have good margins, right, and you get to profitability, start putting some money what? Aside for the rainy day. If you build that discipline, I know school that paid their teachers throughout COVID, they never lost any teacher. They had reserves, very big reserves, which they have built over 10 years. Because for them it's a discipline. And every student, they know this money is for keeping. It's for the rainy day. And they have set sort of minimums. When they go over those thresholds, they can withdraw and put in investment. That is a good discipline to have in this market again.
And that result is different.
It's different. This is money you're putting aside. In fact, on your balance sheet, it can sit as what? Reserves, separate. For you to track it and see it and feel it. You create it as separate. Luckily, interest, although they are not yet, the regulation is still shaky. I feel like they're accumulating so many assets without clarity on the regulation. But interests are making it possible for you to actually keep money without losing it. Because previously, a bank you put, you find less. But now in an interest you put, at least you find slightly more.
What's the interest rate?
Right now, I think they are 10 to 12% per year. And they credit it daily. So if you put today, even after one day, you'll find something. The advantage with it is tax-free. It is tax what? Tax-free. In a bank, interest is taxable. All right? They don't charge tax on it. So you take all the interest that is given to you. Yeah, they 10 to 12 lower than the bank. But the banks are charged. If you get interest in a bank, they'll charge you withholding tax. The banks will give you negative. They'll give you some 5% and charge the equivalent in charges. Exactly, even fixed deposits. They lie. Sorry, bankers. Yeah, so the other thing we wanted to look at is average revenue per order. If you're looking at, if the unit is an order, in some cases an order is important for you to understand, right? And understand the economics of, there are people every time they order, because of the economics of delivery, they lose money. Every time there is an order, they lose money. Every time there is an order, they lose money, right? Because each order is not profitable. Now, these are the ones I talked about, which are important for tech. But actually, before we do that, let's do break even. That is 2 pages ahead, where you see break even analysis. Break even. So I think because this is something we hear every time, and I'm sure we talk to businesses about, right? Basically, break even means you're able to cover your costs. You're not making profit, positive profit. In accounting, 0 is a profit. Even a negative is what? It's a net loss. At least that one they differentiate. But when you have 0, they will say net what? Profit, 0. So if your net profit is 0, you are at break even. If it is above, you have positive what? Profit. If it is below, you are in losses. So that 0 is actually the most important 0. In what? It's the only, I think it's the only important 0 in business. You get? Because that 0 means at least I'm surviving. You get it? I'm covering my costs. I'm not making, but I'm what? And it is the first goal or target to have in business. It's good to set a goal around that, timelines, and understand what it takes. Because it's not enough to say in 3 years I want to break even without knowing what it is going to what? To take. So I wanted us to try and analyze how many royals we need to sell to break even, right? Maybe that can also help with your pricing in the next market to prevent negatives. You get it? So this is the formula. To calculate break even, we need to understand our fixed costs. Who knows what fixed costs are? Fixed costs. Yeah? You incur repeatedly? Yeah? Exactly. You must incur them. They are repetitive and you must incur them. Yes? They are not changing, right? Regularly. They might change, but their change is also not dependent on volumes you're selling, isn't it? So even if we got another machine, we may not need to hire another change and innovation person. Even if we say now we are expanding to 2 machines, we won't need to have another change and innovation or another admin person. So that becomes a fixed cost. It doesn't mean it can't change, but its change is what? Not really relative to volumes. So we need to know those fixed costs because those are the ones we want to cover. Right? After covering the cost of production, our next attention is what? Fixed costs. So we get those fixed costs and divide them by the difference between selling price per unit minus variable cost per unit. And variable cost per unit is what we used. I said it is also direct cost per unit. The reason they call it variable is because, again, if you produce 1 more royal, you'll have more of those what? Costs, like raw materials and labor. Yeah? Okay, so what were our fixed costs in the last... yes? Mm-hmm. Is it fixed? She's asking the money we pay the laborers, the people that are operating the machine. Is it also part of fixed costs? Why? Maybe you can explain for someone. Exactly. Because they told us when a machine of 4 people or 4 royals requires 12 what? People. It means if you cross over to 5, you already have to think of at least some more people. So it's varying. Yes. Yeah? So what are our fixed costs in this case? We have admin overheads, change and innovation, sales and marketing. Does it, if you're going to do an advert, would they say how many royals are you producing? You get it? Mm-hmm. So let's add everything below gross profit. Except interest. Let's not add interest for now. Let's add. Yeah? Did you first look at the number of royals before you decided how many bids to buy? No. You could actually advertise and still not sell. Or you could advertise before even what? Producing. To prepare your customers. So advertising is fixed. It doesn't vary by how many royals you're producing. So it is what? 6. So I'm excluding interest intentionally because if we had no loan, this wouldn't be a concern. So 6 is our fixed cost, right? Okay. So what was our selling price? You can fill later. I'm just trying to manage time. I will use it. So 6. What was our selling price? Each one had their own, right? What was our variable cost? Direct cost per unit. Variable cost per unit. We just calculated it. What are our variable costs per unit? Raw materials, 6.25. We just calculated it, right? It was that 6.25. So when you get selling price minus that direct cost, that variable cost, what was it? We also calculated it, I think. What was it? It was 6. For you, it is 6.35. Each of us had their own. You're not there? We are not. Okay, let's follow the sheet. Let's do it in this. Let's list our fixed costs here. In the first, I think it's the second column, 1 to 7. The first one is change and innovation. Let's put the figures in month 1. Change and innovation is what? 1, isn't it? Sales and marketing is what? Is also 1. Advertising, that one varied. Yeah? That one varied. Some had 1, some had 2. So you put yours. Admin is 1. Admin overheads, 1. Okay, so you add up down, under total fixed cost. Add that. It is 6 for you. Even you 6. Okay. Who has a different figure? Some people had more advertising, so they yeah? You had 7? Okay. What was our selling price? Put it down. The average, each of you has a different one. Put it there. Yeah? Put the selling price down. We all had a different one. The selling price per unit. You had 10. Them. Crazy X had 10. Sure. Selling price per unit. Hey, put it down there. Are we done with that? Now variable cost per unit. Previously we called it direct cost per unit. That one we had the same. We had the same, right? 6.25. You remember? We had the same. 6.25, isn't it? My formula is. So what we want to know is the number of units we must sell to cover our costs, right? And this is the formula. Who can tell us the formula? It was there. Listen, let's listen. What is the formula? Fixed cost. Yes. Over selling price minus variable cost. Have we all had that? Fixed cost divided by selling price minus what? Variable cost. So now let's calculate and see what answer each of us gets.
Total fixed costs. I passed 12.5 minus 6.25. 12.5.
Okay, there it is.
6.25.
Okay, let's see what the answers are. Sons. $1.22. Creative. What do you have? What answer? You're still calculating? ABC, clear? Sorry. Very interesting. 0.94. ABC. Crazy X. 1.6. Where? Okay. 1 point. Futuristic. Futuristic. 1.1. 1.2. 1.12. Yeah? 1.12. Okay. So let's listen then. So what this means that if your fixed costs stayed the same, right? If your fixed costs didn't change, Sons needs to sell about 1, right? 1 may not be exactly enough, but 1.2, that's what it says. But ideally, right? To be about 1, safer to sell 2. Make sure you sell at least what? If your costs don't change. But if you spend more on advertising than you have, it means you need to target more numbers. Are we clear on that? If Sons sells 2 royals, the answer is 1.2, right? But we are rounding it off above. If they sell 2 royals and their fixed costs don't change, the way they spend in the next market, and it doesn't change, they should make a profit, or at least what? 0 profit. Meaning they shouldn't be what? In negative. So their goal should be at least sell what? 2. Are we clear? If they sell 2, they should not make a loss. Creative, for you it is clear it has to be 2. Because yours is closer to 2 than them. Yeah? So I would target 3. If I fail, at least I get 2. So when you're bidding, you have to be aggressive a bit. But remember, this is only dependent. This also assumes that the price is not changing. You get it? So if you start to go below the current price, then be careful how much you spend on advertising. Are we clear? In the next market, if you're bidding and pricing, if you go below what your current average is, of course now you all know, so you can have an idea how everyone is going to think, right? But if you start to go low, and you're starting to spend more on advertising, then you're going into a dangerous what? Territory. These guys are safer. Right? ABC and crazy what? X. If they maintain the price and get even just 1, no, it's Creo and ABC, and they get even just 1 royal, they shouldn't have a problem. Yeah? And then Crazy X is like creative, right? They're in the same boat. They need to work harder to be profitable. That's what break-even means, basically. So those units, and this is a question someone will ask randomly, or you should ask, especially those that are still loss-making. You ask them, so what will it take for you to break even? Then they'll tell you, I need to sell 1,000 units. If I get to 1,000 units per month, I'm fine. Yeah? Yes, you have a question. Sorry? So this is per cycle because we are going in cycles. But ideally it could be per month, right? Then it could be per year. Usually per month is better because that is the smallest cycle, right? If you target per year, by the time you realize, oh, I'm not coming close, it is. So better look at per month because things are also changing very fast. In a startup, things are changing rapidly. So that number is going to change. It's not going to be static also. You have to just monitor it. Yes? Mm. Multiple products, yes. Yeah. So the first thing you need to do is to first do it per product. Just understand the economics of each product, right? And then one way to think about it is to think about what the mix is likely to be. And that's how someone says, you guys in this department, you have to make me this much. Or think about a business like Chivoko or Mukwano. So many products, right? But they will arrive at a situation where they do distribution. They will know this is how much money we need, revenue. For them, they will first think in terms of revenue, for example, right? To cover our costs. That's the concept, right? If we know we need to sell this much, then you can distribute it by product and say, FMCG or oils, you have to sell me this much. You have to sell me this much, right? But the other alternative is to also think about an alternative unit. Because your products could be a basket, like e-commerce, right? You could think of a basket and say, I want to think about one customer again. That is my unit. Such that in my head, I just want to know how many customers do I need to get for me to be profitable. Because I've calculated, I know how much revenue each customer is able to give me every time they log in. It becomes even easier with subscriptions, right? Where it is multiple subscriptions per customer. Then you just need to know, if I get one customer on board, I know they'll subscribe for this service and for this service, right? So it becomes sort of basketing. Yeah, so you just need to think of the alternative units that make it easy for you to just know. This is the number I'm going for. I'm going for 1,000 customers. I'm going for 1,000 kilos or whatever. The easiest to understand for everyone. Because this is a number, especially when you're a startup. For startups, it is very important to be open with your team. Build a team you can be open with. That's what I always tell people. Because if I'm in a startup, this is a number I would want everyone to know. I would want everyone to what? To know that number. Say 1,000 customers. That is the goal. That is what keeps us going. If we don't get that, we are always living in fear. Shall we pay salaries? Shall we do this? Which is normal for a startup. But it is important to know what it takes to get out of that. Yeah? Because then there is a concept called runway. When you're running out of money, that is even more important before you become profitable. Because it means the money you're relying on is not sales. It's investor money. So you always have to monitor the bank account. You get? It has to be on your phone. Every time you have to monitor it. Quickly, I wanted to look at...
There's something I am still trying to
understand, yeah.
understand. She has tried to explain to me, but even when I go back to it, I feel like some missing up. Like, you see the zip Creo something has 1.6.
That is comp creative. This one?
Down.
This one? Crazy X, or which one?
That one, yes.
This one?
Yes.
Crazy X, 1.6, yes.
1.6. And then the first one, Suns, has 1.2. So I'm imagining Suns was performing better than
Crazy X.
Why
Is their number lower?
Them having 1.2 or 0.6 would make me think that
they are better
off than 0.9.
I see what you mean. So this number works the opposite. If this number is low, it means the number of units you need to sell to cover your costs is also what? Low. Is that a good thing or bad thing? The number of units you have to sell to cover your costs is lower than another person. Are you better off or worse off? you're better off, right? Because for them, they need to work harder. You get it? So these guys have to work harder than these guys. So it's the opposite effect. So the only way they can catch up is either they reduce their costs, fixed costs, you get it, or they increase their price.
So in short, you're saying if we sold a little more products,
Mm-hmm.
we would get like 0.6.
If you sold a little more products, your ABC?
94.
That's not what it means. What this means is that if you sell more than this, yeah? Because this is the number you must sell to cover your costs, which is, we rounded it off to 1. Means if your costs don't change and you go and you get 1 sell, you shouldn't be in negative profits. You should either be 0 or more. So selling more than 1 is an advantage. It means you are in profits now. Positive. Anything beyond 1, you can actually put it in the bank if you've collected all the cash that you're owed. Can put it aside. Yeah. Okay, lastly, before we resume, I think our time is running, and I'll just run through this quickly. There's what we call customer acquisition cost. That is straightforward. It is the cost you incur to acquire one customer. Are we clear on that? So the easiest way to calculate it, historically, look at your sales and marketing cost, divide it by how many customers you got. That is the easiest way. Sales and marketing cost divided by how many customers you got. This is the easiest metric to measure performance of your salespeople. How much am I paying you? How much am I giving you to airtime to go to the field? How many customers are you bringing me? Is it? Then they'll tell you, oh, we need advertising. You are like, okay, let me put. After the end of the month, you are like, okay, we spend this on advertising. We paid you. How many customers did you get us? And what is the cost per customer? You get? So the higher that cost, the worse off, of course, you are. It means you're spending more to get customers, and therefore you need them to buy even more for you to cover that what? That cost. I think that is understood, right? Customer acquisition cost. When you acquire a customer, you need to have an idea how much did it cost you to acquire them. Yes?
Sounds very high because if I put an advert on MTV, after how long will I start knowing that these customers came because of my MTV advert?
Even if you don't know where they came from. That is better, but let's assume you don't. The fact remains you spent money on what? Advertising.
But are those have been coming even without advertising?
New, because acquire means they are new. So we are looking acquire. If they are there, then you can't calculate, add them to, because you already acquired them. They are there. We are looking at new what? So if we are looking at, let's say December, I'll look at how many new customers came in December. You get it? Versus what I spent on this sales cost generally. Of course it varies, that number will vary, but you always need to push your what? And there is what they call steady state. In a steady state, that number will also, there is a number in a steady state, meaning in an ideal situation, this would be it. So you need to understand it. Now, when you understand that number, then you need to compare it with what we call lifetime value. Maybe you can explain lifetime value because you are in tech. You are an entrepreneur, so you... No, forget the formula. Yeah.
Okay, so lifetime value it means that how much value am I going to get from a single customer for how long? Because that's where retention now starts to matter. To know that, because even the customers whom you're talking about, they are still that means that you have already acquired them. So in how long and how much value are you going to obtain from them until when either they die, until when lifespan or any other particular business. So how much is that maximum value?
Yeah, so if replace value with profit for simplicity, how much profit am I going to get from this customer for the lifetime they'll be with me. And like he said, that is, of course, they could die, they could move on and get another what? Alternative. So for them moving on that is rough, but it's equivalent to death. They are no longer yours. They have moved on, right? So you need to understand. First of all, there is something called churn rate. You have to have an idea and at least assume they will leave. So you need to know churn rate is the rate at which you lose customers. Yeah, you have to have an idea. Say, okay, if a customer comes in, I know there will be 2 years before they start to think of new alternatives, or before they move on, or 5 years or 6 years, right? Of course, the longer the better. That's what is called retention. You always want to retain them for as long as what? Possible, isn't it? Now, there are so many formulas. When you Google this, you'll find a number of formulas. But the simplest way is, again, look at what is the net value I'm getting from a customer, right? Per month, and multiply it by the number of months they are going to stay with you. Are we clear? If they are going to stay for 1 year, think about 1 month. How much profit am I getting from one customer? Multiply it by the number of what? Month. Now, how you calculate profit? You could just look at how many units they are getting, they are buying. Yeah? And multiply it by the money you make on 1 unit. In this case, we said we make how much? If we sold this at 10, we would make 3 point something, isn't it? 3.75. Yeah? So if a customer is going to buy 10 every month, they are giving me about 37.5, isn't it? And then if they are going to stay with me for 10 months, it means over their life they are going to give me 300 something, isn't it? Over that time. That becomes the lifetime what? Value. You can chew on that one because we are running out of time. Why is that number important? Maybe to end. Just to emphasize again, why is that number important? Because remember, but like I said, you have to compare it with the customer acquisition cost, right? If that number is lower than your customer acquisition cost, what does that mean?
Means that actually you're carrying more than you are, because you more than what you give back.
Exactly. So those customers, unless they are giving you another advantage, they are a disadvantage. Because every time they walk into your door, your bank account suffers. You get? Every time they come, more customers becomes a what? A problem. So you always need to make sure it is, at least you're gaining more than. All right, we'll do one more market to refresh ourselves, minds, and then we'll close it for the day.
Even this one,
Yeah.
I know that ratio needs to be LTV to CAC needs to be of the 85% needs to be 3 or 3. From your experience, still, I want to come from your experience because that's the process. Just make sure that you understand which
We're going to use page 14 and 15 this time for month 3, right? Are we all together? So we're going to use page 14 and page 15. So we're going to start first with page 14. And this is a very key part because based on this, your team is going to decide on what kind of improvement you're going to make. Right? Sometimes we visit the businesses that we are mentoring or coaching, and we're telling them, why don't you do this? Why don't you expand? Why don't you buy new machinery? Why don't you invest maybe in something like customization and things like that? But now we want to see us when we're walking in their shoes. What decisions would we make, right? So you see the first option there, raw materials. Page 14, that's where we are. Could someone read out that? We'll start with this group. Page 14. What's the first one? It's called raw materials. Could you read for me that? Switch your machine over to using a cheaper source of raw materials. Direct costs for raw materials drops from 3 per royal to 1 per royal. There is a one-time charge of? There is a one-time charge. There is a one-time changeover expense of 2 per machine paid as an overhead expense. This addition to the regular machine overhead expense. Okay, so I'm going to break down what he has read. And I want you to listen carefully because all of you will make a decision and one of you will get a chance to choose that option. So you have an option as a business owner right now to choose a raw material option. That means you have found a supplier who is going to sell for you the raw materials at a cheaper price. Right now, how much is a raw material for a royal? How much does it cost? 3. Now, you're going to buy a raw material. Can I have the green? You will have this kind of raw material. You see, it's only 1. So you'll buy the raw material at only 1, not at 3. Right? So if you were spending, what was it, 12? How much are you going to spend now? 4. Because it's only 1. Right? So your direct costs are going to drop from 3 shillings to 1 shilling per royal. Right? You're going to incur an overhead expense of 2 per machine to the usual 1 charge. Okay? So right now you're paying overheads of 1. You're going to pay an additional 2. And it's supposed to be paid cash only. Are we clear on that? So when you choose that option, you'll receive green raw materials. Your price will reduce to 1 shilling, but you'll incur an additional overhead of 2, that will be 3, and you can only pay cash. Are we clear on that option? How much are you paying right now? 1. You're going to pay an additional 2. One-time expense. One-time expense of 2. You will have 3 there. Have you got that option? So right now, how much are we buying raw materials at? So you've gone around the market, you've discovered that there's someone who's selling the same material but at a cheaper price. So I can go and buy from that new supplier at 1 shilling per royal instead of 3 shillings per royal. So in total, how much are you paying for all the 4 royals? No, for currently right now, in total, 12. So if you get this option, you're going to pay 4. But it comes with a one-time cost, additional cost of 2 in the overheads. So 2 plus 1 is 3. One-time payment. Right? Are we clear on that? Customization. Okay. Okay, that's okay. Are we there? Then we have the second option is customization option. So we have the customization option. Because of time, we're going to choose 2, and then next time maybe we'll run all the 5, okay? So we're going to do customization. So for customization, it means you are the only one in the market who can offer premium packages. I want you to switch over to the next page, 15. Do you see the C? Only your company can bid on that C order. No one else in the market can bid on that C order if you get a chance of choosing this. Are we clear on that? Only your company. But what that comes with is that you have to pay a cost of 10 shillings. Okay? And this can be paid cash or credit. Can be paid cash or credit. But you have to make sure when you go to the market, you put the letter C in your orders. If you don't put the letter C, I assume it's a normal order, and therefore I will not give you the customization order.
So how will you sieve out the cream de la cream?
So the C. So you have to, if you get the option of C, only you can put C302 on your bid form.
But if other people put,
They cannot put. Only you have that choice to put that. So I'm going to tell you how you're going to get that choice. We have to first get the choices clear. Right? How do we apportion?
First come, first serve.
So only two people can do the, only two companies can do the improvements.
Should they bid for it?
They should, because we have to be careful how do we choose the.
Yeah, but the price cost is already there.
So if you're doing, maybe we can also do efficiency, since it's related to
But still,
expansion.
that still some people won't.
Some people won't get.
Let's just
We do two companies. We'll have that choice.
first come, give them 1 minute. Whoever comes, we'll get to discuss.
They will come at first.
Whoever puts their hand up first.
Yes.
For learning purposes, why don't we give the ones who are struggling?
Competitive market. Okay, so this is how we are going to choose who is going to get that option. We want to be as fair as possible, right? Only two companies will get these options. Whoever puts their hand first gets the option. Remember, we are 6. 2 options are on the table. It can potentially, for you who are making losses, it can potentially change the game. For the ones who are market leaders, it could potentially catapult you to the next level. Okay? The C means you're the only one who can bid on C orders. So you can put even the maximum price and you'll still get that order. Right? So if you see the C there, C302 is quantity of 4 at 30. Right? The market price is 13.
How about we put in papers and they come and draw? We can rewrite them, they come.
If you can write them quickly. So we're going to have a draw. Are you ready? Okay. Let's quickly draft the draw. So all 6 will have none. Not 6. 4. Have you got the 4? This is none.
How many none?
First dot mix.
How many
Now
none?
we have customization.
We have.
There should only be one customization.
We have. We
One
already
raw
have.
material. So don't
It's
put
already.
2 of them. So this raw material is already there. This is a none.
Do one more none. 2.
So I want customization. Customization.
Quick one.
Wait. There are only 2 none.
There should be 6 in total. 6 wrapped papers. See how many I have. 1, 2, 3, 4, 5. 1 of none.
So each one person has come down with some.
Yeah. Checklist enforcement officers, right? I'm putting it here. Come and pick and go. Only one. Your option. Wait. You come. It's random, yeah. Only checklist and for the CEOs, please. CEOs. CEOs. There is one CEO missing.
Where's the customized? Customized is here.
Uh-huh. Uh-huh. So who has raw material?
Who has raw material? Huh? What's that? What?
Futuristic. Who has customization? Customization.
Who has?
ABC Limited. Okay, so one. So you are the only one who can. But make sure that in your bid form you put C. If you don't put C, you don't get that. You remember the cost you have to pay for that? I need 10 shillings. Okay, so when we start, they will go around and they'll collect the 10. Okay? And then we start. Only for customization. Let's go to our checklists. Yes? So that's what we're doing now. Number one, we are going to clear the income statement. You remember? For each period, the income statement has to start from 0. So please put them in the empty boxes, and then we're going to come and collect them. All the money that is there, then we're going to come and collect. Clear your income statements. Clear everything. If you've received an improvement, that does not automatically mean you'll be the market leader. So be strategic in how you make your decisions now. Right? Okay, we're going to start. Number one, have you ticked that? Clear last means expenses. Please tick that. Number two, update receivables. Please update your receivables. Yes. Update. Yes. Move them. To 6. No. To 60 days. Don't move them to. Move them forward. Unless you sold on cash last month, you should only have 41 receivables coming. Unless you sold cash last month, you should have 41 receivables. Is it 41? Yes. 41 receivables unless you sold cash last month. And you had cash. If you had cash, that is okay. 41. Yes. And then that one. Yeah. Have you updated? No, we're supposed to. Yes. Now move. Can we tick that? Update liabilities. So liabilities, you have a payable. It moves up once. The loan moves up. Yes, there. It stops there. Update a payable. Have we updated? Okay. Have we updated our loans and payables? Then we're not going to buy or upgrade machines. That offer was not there, right? So we put an X there, right? For buy and upgrade machines, no one is buying or upgrading a machine. Then we're going to pay recruitment and training. How has anybody hired new staff? No one. So put an X there. Buy raw materials, cash and credit. Who are the raw material option? Remember what the cost is? You're going to pay 4. But you want to pay over the so these ones, you start with these ones, they had cheap materials of 2. You have to pay 2. You pay 2 here, and then when we pay expenses, you pay an additional 1. So pay. Make sure you're not missing money. Yes. That's what we've done. And then pay him 4 for the materials.
For.
The materials remain the same. Have you all received raw materials? We are paying for raw materials.
We are not paying for raw materials.
We have no choice but to pay. We have to buy. What do we have? But we are paying it for low price. We are buying 3.
We are buying 3.
Guys, let's pick orders. We are going to pick this one. This is no choice. No. 04.
As for who chose none.
So you buy the same raw materials. We give him 12. Pay for the raw materials.
Give me 12. Give from cash.
You want to pay one? Buy cash or credit? You want enough cash? It's a must. No, it's for standard buy.
You can't produce this on capacity.
We have into there. Because the machine we have.
The machine capacity is 4. So we are going to pay.
Tell me.
You give him.
12.
You give him.
That will be paying workers. You pay me 12. It's going to be interesting. I'm surprised actually.
Have we all got our raw materials? Yeah?
Do you want payables? You have to decide. Do you want pay cash or you want payable?
Give us payable.
Payable, yeah?
Then
Yes, it's cash flow management. Then is it okay for us to, if I tell them to go for this, you know, I'm also go for another, but we have to is it but can they get
We had given you an option of improving the efficiency option or expansion option if you have got a machine. So we're not doing it.
so and how I don't know
You can choose 2 or 3 as long as the order in one order should not exceed the number of units you can produce.
Now,
So you can take some order numbers, some order numbers. 1, just
out of this one.
Yes,
I
out
can
of
say I'm not going to take this. I want this please because of the payment. Then out of the 4, then I take this
you
one.
can choose 4 because you want, you can choose 4 because you want No, you can't do that. You have to supply full order, full quantity.
Here what are they paying? One, they've already paid for us.
You've already paid for the raw materials.
Yes, now
but
the
you
labor.
paid less than everyone in the market.
Okay.
The labor remains the same. It's just the raw materials that the cost has reduced. Okay, so we're moving on. Load the machines and pay the laborers, the production laborers. Load the machines.
Let's put another on my
Yes.
How much are we paying the
We have already paid.
the same amount.
Yeah.
Here we are paying 1-1.
It's not like I said two.
For them, yeah, because they have that with the raw material option. So they are buying cheaper raw materials, but their labor cost remains the same.
Okay, for us it's still that.
For you, it's
So you put 3.
So put 3 per unit. Remember, only the ones who have the cheap raw materials are the ones who can pay. How many do you have now per unit? 4. Right? 4. The rest you still remain with 6 per unit. Are you seeing that? Have we all paid? Let's tick that. And then take depreciation and pay expenses. So take depreciation and pay all these expenses. Take depreciation and pay expenses. No.
There's no additional.
Yeah, for your option. If you want to expand or get customization, you're not going to incur another cost except for the ones that you already incurred. So you still incur the normal cost because you still have this machine here.
So we could, eh?
Yes. Pay expenses. Let's all pay expenses. If you've not taken a loan, don't pay interest. If you've not taken a loan, don't pay interest. Have you taken a loan? We already paid last time. It was a one-time payment. So. Yeah, but you already paid interest for them. For this simulation, we are doing a one-time payment. In the real world, of course, you have to pay every month. But for this, only one-time payment. So you don't have any, unless you take a new loan, you don't have any interest. No, this month. Then you should have 30. There's no new loan. It's a payable. Yeah. Yeah. Yeah, but you got a payable, not a loan. So you don't pay interest on a payable. Yeah. Have we all paid our expenses? So I'm going to set the timer. I'm going to give you 5 minutes to prepare for market. But let's first analyze the market. Can I have your attention? We are going to analyze the market. Okay? What is the room capacity? What is the machine room capacity? Can I all have your attention? Can I please have your attention? What is the room machine capacity? How many machines do we have in the room? Do we have 2 machines in the room? We have 6 machines in the room. What is the capacity per machine? So does this change? So this remains as 24. Finished goods. Check your competitors. How many finished goods are available in the market right now? These are 2. Those are 4. No, don't mix that. Only finished goods, not work in progress. 2, 5, 6, 10. Is it 12? Do we have 12? So what's the total here? 36. What about the market demand? Look at your market demand page. What is the total there? 33. Less customization? 29. Do you know why we're removing customization? Because you're the only ones who can bid on that. No one else can bid on that. Right? So what is the demand here? Oh yeah, we're lessing this. Less this. What's it here? Minus 29. No, sorry, 4. What is it? 29. So your demand is 29, but you're supplying 36. Are you seeing that? Do you see the discrepancy there? That means there might be people who might go without selling. So we have to be very strategic on how we decide to bid in this market. Do I give you 5 minutes to start? Put up your hand if you're ready for bid orders. Ambrose? Bid forms? When you receive pay, I'm coming. Who called me? Are you ready? Have you paid? Pay 3 there. Sons, are you ready? Crazy F. Are you ready? Are you ready? Yes. Futuristic, how many do you need?
Give us 4.
Like that. Pay 4 there. Cleo, are you ready? You've got? The maximum price for this market is 13, meaning you cannot set your price above 13. I'm setting the timer now to 5 minutes to fill in your bid forms. 5 minutes to fill in your bid forms. The maximum price is 13. You can't set above 13. Maximum price is 13.
Ready.
4 more minutes. 4 more minutes.
sample cash.
Are you done? You guys are done? I feel the pressure in the room. Cash.
The quantity is 2. The term is 30 days. The price is 10. The price is 10.
Bid is a cash at 11. So, but total work for is 11, which is 40. You take out 40 for it.
Here for me, I'm putting the what? The prices. I want to just know how much you put. We need to win this
You just need to be a super
But we're not going to go to the loan. This is the last cash.
What I know,
If you're all done, you can move. Are we all done?
Deep breath.
Are we all done?
The time they're giving us to make a decision themselves is too short. That's not the time to spend. This thing is like, because all these other things, you can think them, and then, like in the real business, thinking them is okay. But wait a second.
that for them it
You sit. Once someone moves quick, you sit. This time now, she's a little hesitant. Let us move with the. About that game. I'm not in my top form. Yeah, because I remember you last time, you were a little more vibrant. Yeah.
Bring the beats, my personal. Hey, you don't have hurry up.
You shall be sad.
Guys,
You shall be sad.
crazy. Are we ready?
Yes.
Okay, I'm going to start reading the orders. Order 301. That's 301. So we have Crazy X, Clio Connection, Perfection, and Cop Creative. Order 301, quantity is 5. The lowest here, this is 60 for Cop Creative, automatically disqualified. Clio and Confection all have 50. Someone wrote here we are verified by UNBS. But I'm going to look at your advertising cost. What was your advertising cost?
5.
Who's Clio?
Yeah, we lost.
Can they confirm that?
Why did you disqualify yourself?
We have
You never
3.
know. You never know.
No, they said 5.
Okay, production was from the Crazy X.
We have in the store. We still have
Crazy X.
products.
302. This is automatic. Goes to ABC Limited.
Wow.
Congratulations. So you now have only how many remaining? You've supplied 4. The quantity 2. Okay. 303 cash. 303 Futuristic Co Limited, Com Creative Limited, Clio's Confection, quantity of 4 cash. I have a 36, a 42, and 44. Clio's Confection 44, automatic certification. Com Creative Limited 42, no. Futuristic, this goes to you. Congratulations. 304, order 304. 304. People are getting confused. 304.
You want money?
How many are remaining?
What?
How many units do you
How many
have?
units do you have now? You already have 4 units here.
Yeah, we had the 24.
Huh?
No.
You can't have
can't
those
get-
four.
They had
CEO.
They already had 4.
CEO.
They already had 4.
People in production, we go and check.
They had 4, so they have a total of 8.
That's CEO.
Really?
Yes.
Did you sell
Last
last
time they
market?
sold only
We
1.
also do
Only
yes,
one.
yes.
Okay, so you're remaining with 4. Okay, that's good. So you're still in the running. You have 44 here. Sans has 46. So Sans, you're out. Futuristic, congratulations.
Wow.
So you're out. You can't put in anymore. 305. 305.
Still, we are still busy. We are still busy.
Trust our president. You're giving up. CEO. 305. 305. No one? Crazy X, congratulations. You take that. No, wait. Crazy X.
capacity.
Didn't you win the first one?
We shall outsource.
No.
That's a good strategy.
And even this
But
one,
there's one
and,
of 2. There's one of 2. It qualifies. You still have 7.
maybe for this one, madam.
For this one, you can
you
squash.
get for this one.
This one you can
But
smash
for this one,
and
you
shred.
squash.
Shredder.
Okay. Are we there?
Yes. So,
Are we going to 305?
There's no
yes,
one
so
there.
that's not applicable.
Goes to China. 306. No one. 307. No one.
You have destroyed them.
But you don't.
No, you
have
cannot
capacity.
anymore. You don't have what to supply.
308. 308.
I'm disappointed.
I have Sans Limited 22. I have Clio Confection 23, and then I have ABC Limited 24. So this goes to Sans Limited. Price is lower.
But someone may want a higher price.
When you're greedy.
309. 309.
Yeah. My Jesus.
All of us.
You guys waited for the last orders.
And
Okay, so we have ABC, price of 23, Com Creative 24, Sans Limited 23, Crazy X, congratulations, 20.
Our products are cheap and
Where are you going? We are still bidding. We are still bidding.
Last order, 310. 310. This goes automatically to you, Sans Limited.
At how much?
yes,
At
and your
12.
strategy.
Congratulations, market is closed.
Salome.
Take your product from machine and put it in finished goods. Thank you. Okay, have you put it in finished goods? Thank you. Take product from machine and put in finished goods. Put them here. Put all these here. Have you all delivered? So when you make your delivery, you're going to be paid. These ones have made their delivery. Remember, you put your bid form on the sales and put your deliver. You've sold only 3 units? Okay. How many have you sold? 0. Ah. How many have you sold? This was a very competitive market, eh?
Money is flowing. So even if we
didn't sell. When we first started with getting no, because at least if we had this, we would have had the chance to sell at lower prices.
Yeah, true.
We still remained on pay. No, but the other person had 5. If the advertise higher than we have when
Yeah.
you don't have the other chance of utilizing.
Or customizing.
Too much the other side. It
But
cuts chewing us.
that's what happens in the market. Sometimes you sell, sometimes you don't sell. So if the business tells you I have not sold this month, you also have to sympathize a bit and some have sold, some have not sold. You're rushing to me.
We worked so hard.
The teamwork paid off. You slipped up to your name. David. Have you been paid?
yes, we have.
Has customization paid off?
We are going to go to
Hey, you sold everything. Have you all received our payments? So let's complete our books. Let's do the final round, complete our books, and then we have a quick debrief. So we start with the income statement, you remember? Start with your income statement, last page. Whatever is on your board is what you put on your income statement and balance sheet. So start with your income statement.
it's the last page. Now you're on month 3. Yeah. You're starting with the income statement. Total
52.
sales, huh? We have 52. Cost of goods sold. Hi. We have 10.
So which income statement are
We
we
have
on?
10.
Which number is that? Oh, again.
Now we have cost of goods. Hey.
We needed to get this.
To get this, we needed to at least add one more. Because I remember we did what? Which one and which one? We have 12 on raw materials. We have 10 on customized, that is 22. You also count labor? Cost of goods. Wait.
We needed to lower the price in all situations.
How are we getting the cost of goods? Even if we lower the price, will not be less the direct cost. Okay, cost of goods, chips, raw materials, what, and labor. So that means we have 12, 10, and labor. Now we are going to operate in a loss.
Labor is how much?
Labor is 4 times 3 is total. Okay. So this is 24, 34.
So because we are calculating, we did 40. So this is 24, isn't it? That is the cost of labor. 6 plus 6 plus 6 plus 6, isn't it?
Yes. How come I have 12?
12 was it?
A plus labor, it makes it 24, yes. Then plus yes, the raw materials and the labor makes it 24. Then plus 13.
Yes.
So making it 34. So we should put here 34, right? Okay. So this is 20, no, not even 20, Banake. This is 18. Contribution margin. Is it 60? It's 52 minus 34.
Minus 34. Which is how
Calculator.
much?
We should have won one more.
Those two, that's why I was striving for us to sell this.
19.
22. Cost of goods is 24, right?
34.
A plus 10. The 10 we paid.
So factory overhead, we cannot reach it was a cost.
Okay. So that's 2. Because we have,
Balance is 18, no?
here is 2, right?
Ivan,
It's 2. The factory
when we are
overhead.
counting our cost of sales, we add the 10 that you deducted
That was for the machine.
for the customization. I'm saying the 10.
For the 10, eh?
Yes, for the customization, it goes in costs of sale.
I want to understand why do you have 19, not 18?
52 minus 34.
Not 18.
52 minus 34 is how
Not
much?
18.
It's 18. 42 minus 34. Oh, no,
Because the 15 minus
52 minus 34.
yeah, it's 18. Sorry.
Factory overhead.
It is 2 factory overheads. We have to because we have.
Factory overheads.
Then our gross profit is 16. Let him first come and tell us.
You gave me 10, right?
Is 2, eh?
You gave me 10.
Yes.
Yes.
I'm going to give you 10 because the machine, you now have a different type of machine. This value should have increased by that 10.
So
You get
we
it?
I'm
don't
saying
need
that
to.
the 10 we paid to get the customization.
No, it won't go here. It increases the value of your machine.
Our machine.
So I'm going to add you.
So that means we can't less it here.
You can't list that.
Okay, so here it remains 24.
24.
So that means on what?
Yeah?
On the factory
Your machine.
overheads. Okay, yes. Assets.
There should be 10.
How are we going to count that?
So Ivan, tujibalira
We add on factory.
We add it on factory.
Overheads.
Which one?
We
The 10.
yes, the 10 tujigatta.
10 is in balance sheet.
Balance sheet.
not in the
Okay.
income statement. Because it's on, yeah.
It's okay. So meaning here it is 52 minus 24. So 52.
Gross profit is what?
Just a minute. It's 52 minus 24, which is 28, not 18.
How come?
And remember here, so this one is 28 now. But we are both 21, 28. The other ones are 2, right?
52 minus 24 is 28.
So our gross profit is 26. What's this 28 minus 26. Then selling and admin operating expenses. It is 1, 2, 5, 6, 7. So this one makes it
Operating
19. Yes. We don't have here, we have a 0, so we keep with 19.
Selling admin we
5, 6, 7, yes. So our retained earnings, we shall have 25 and 19.
let me count.
We really have receivables. 7 now receivables. This is wait.
receivables, yes.
This is 52, right? Yeah, this is 52. And then this was how much? When we sold the other, how much was our receivable here? It was 38.
Yes, 38.
38 plus 52 now.
38 plus 52.
38 plus 52, 90.
90.
Yeah. So our inventory, we still have 12.
What is inventory?
There, the 2.
Retain earnings?
6.
Retain earnings total?
Not yet there. 44.
Hey!
So we have inventory 12. The finished goods.
Yes.
So that's 12. So we add all these up. 90 plus 12 plus 7. That is 109. Okay. Machines. Now. Machines.
We had 18 here.
Yes.
So plus this
plus
10.
10. So that's 28. Okay.
Land and building.
It keeps at 20. Total fixed assets is 48. So now it is 109 plus 48 plus 48, 157.
Payables.
Payables. Yeah, it is still 12 because we haven't paid out. Our loan is still 40, right?
But remember, we got a loan another one.
No, it's only, this is 20 and that's 20, so making it 40. So that's 52. Our capital stock is 60. And now our retained earnings, we have actually it's 44.
44, yeah?
Yeah, because it is 25 plus the other, it's 44. So 60, so this one is 6, this is 104. A total, making it, what is 104 plus 52? You've seen the 104? This and this, yeah. Plus 52, which means 156. Where did we miss?
To get this 137 total liabilities and equity.
We should be getting 157 here. I'm seeing we have 156. Did we mess up anyway?
Did you add this?
Did we include those?
Did you include this?
Total overhead.
Did you include these? Did you include
Yeah,
this?
you're getting 150 what?
56.
Did you include these?
Yes.
Did we include these ones?
Total, Yes, overhead. Machines.
We included them the other side. Are you sure that is that is 18?
This is let's count.
Because I'm just wondering.
Oh yeah, this okay.
It should be 7, 5,
7,
9, 10, 12, 14, 17.
17.
So here we should have, instead of 18 here on machines, we have 17. And actually, instead of 28, we have 27.
Where did the two go? They were collecting them.
And we were paying, remember here, depreciation.
So when you pay,
So here
they
it
would
makes
take them.
156.
Because I thought they were bringing them back.
Yeah, okay.
It's okay? Does it matter?
Yeah, because down we had 156.
This total amounts to this total.
It should be the same. Yeah, I think we've made a good profit.
So let's see the gross margin. Let's go back to this one here. Let's calculate this.
Let me first copy the
Come here.
finals.
Professor could use page 1, eh?
What they want? Which page? Where is unit economics?
Can we do a quick debrief? Sons, what's your net income? How much? 6. What's your retained earnings? Yeah. 40. Comp creative? Comp creative? Who's comp creative? -9. Retained earnings? Retained earnings? 11. Cleo? -9. Retained earnings? 16. Yeah, there's another -16. ABC Limited? Yes. 19? 44. Crazy X? Net income? Net income was 17? Then what did you get as retained earnings? 30. Ah. Futuristic? Futuristic?
What was the stock?
Can I have your numbers with balance later than the net income? Futuristic, what's your net income? 28? And then retained earnings? 39. So do you see how the tides have turned? Right? Sans is still strong, but they have been outcompeted by ABC Limited. Right? And there could be a reason for that. They're the ones who had customization. Meaning, they are the only ones who could bid on that order. And they could put maximum price. No one else could put that price. That is why they were able to have that comeback. Sorry, this one's here. How much did you charge per unit, Sans, for the units you sold? Did you win 2 bids? 11.5 and 12. So for the bid which you won was 11.5? The two of them. You won 2 bids? Okay. The maximum price was 13, and they took the risk. One, they charged 1 shilling lower, another one 1.5 lower. And that is why also that could translate to how they have been able to keep the market leadership, right? They're second, but still they have a strong retained earnings balance, right? What did you spend in advertising? 4. Units sold? 3 units. What happened in the market? Maybe tell us your experience. What happened when you went to the market? Why do you think? Did you win all the orders you wanted to put in? What happened? Price? So price was the biggest issue, right? So people were pricing lower. They had learned your strategy from last month and decided to start pricing lower than you. You're seeing that? Let's go to Comp Creative. Where is Comp Creative? There? What happened? Tell us your story. You were at 20 retained earnings. You are now at 11 with a net income of -9. What was your pricing? 12. So 12. These are learning lessons, but this is what happens in the real world, right? So it's good for us to learn from that. So you priced 1 shilling lower than the maximum price for all the bids. 11.5 and an 11. Then why didn't you win those ones? Someone came with a lower bid?
People had efficiency the other side. So they could lower.
They could lower the prices. So Crazy Limited came and swept the market. They flooded the market with low prices. Right? So Crazy Limited happened, and you ended up with retained earnings of 11, right? So that shows that you also have to be creative in how you're pricing, right? Have varying prices. Don't always target the low prices. Sometimes try to take a risk and see, right? That one order might be something that could also change your retained earnings. Cleo? Where is Cleo? Same story?
Yeah, we were outbidded.
By
like we didn't choose the places where we went for. We chose only where there were many people bidding on the same thing. We didn't have the chance of falling a lot of them.
And your prices, how much are you charging per unit?
10, 11, 11.5 for the lower one.
So it was around 10, 11, 11.5. Not a bad pricing strategy. But I think also remember there were some who still had units. How many units did you go with to the market? Did you have finished goods?
Yeah.
These ones had how many? They had more than you. How many did you have? No, total. 8. Right? There are others who also had 8. Crazy. X. 7. And you guys had? So the ones with many units are the ones who went and flooded the market. Some of you remember had only 4. They went and flooded. So they had that option of bidding for many orders. So that's why we said study the market and see how you can be able to. You sold only 1. Yeah. So that's why I said you can have a recovery. Even them now, they have many units. If we were playing another month, probably the tides would have turned again. Right? Yes.
Yeah, so maybe just to add one thing here, and this is where sometimes gut feeling and experience, what we call gut feeling becomes experience, right? Or the instinct. And that is very important in business, that over time you need to learn the dynamics of the market, right? And exercise that judgment based on that experience, right? So you need to learn the patterns, know when to make the decision, and be decisive. You have to be decisive in business. Don't be there trailing with the decision. My mother tried business, and the only reason she failed is because she wants too much profit. Every time she buys, sometimes she was running a store, right? She would buy grain. My brother was abroad, so because me, I knew these things are going to fail, so I wasn't participating. I'm like, call me when you need something, I'll send you money. But business, so my brother would send money and then she would stock a lot of things. We have space, so she would stock. And then I'll tell her, you sell. She's like, the profit is low. You sell, the profit is low. By the time she wants to sell, the prices have come down like a problem. So the sometimes you really something is better than nothing. And it's very important to know when to make that decision, right? Someone called it greed, but it's actually lack of experience. You get it? You don't know. You think this, and that's why people from the corporate world fail at business. When they start business, they see people in Chikubu and then they go there. They think it's easy. When it comes to lunchtime, he orders cafe javas, P&L. His costs are high. The first thing he buys is a nice chair, nice car. You get it? He doesn't know what actually drives success in a business, because he sees what he's using his experience in MTN, not knowing that he found MTN at a different what level. Exactly. You get it? So those are the dynamics that are important to understand, right? As you can see, if you're thinking about profit, the chair may be important, maybe it creates a good impression, but before you buy a chair, have a machine, right? Or think about the more important what? The more important things, right? That actually add value, and that's why you should do what? Invest. We didn't have those details, but those are some of the decisions, right? At least you know what is important based on the simulation. Then you focus there in the real world. Think about, how do I manage my cost efficiency? Minimum cost for maximum what? Profit. That's the balance. So always try, and you learn over time, right? You learn about that. The more you stay in business, the more you learn, and the better it becomes. So it's also a learning process. You can see that if we add 3 more markets, right, you gain experience. Yeah. You start to price better, you start to compete better, right? Yeah.
Thank you. So we have ABC. They are now the market leaders. Can you tell us your story? What happened? Luck. Because out of the 6, you guys are the ones who chose customization, right? In a random draw.
Exactly.
So sometimes, yeah.
To luck, which cannot be explained. Then we strategized.
Mm-hmm.
We tried bidding for because when you calculate our gross budget and everything,
Yeah.
it has increased a bit.
Yeah.
So I wanted to get those extra 2 cells.
Yeah.
So that it increases our what? Our profit margin.
How much did you spend in advertising?
3.
3. So you knew you had that one locked, but you still went for the 3.
Exactly.
Someone would have said, let me stick to my 1, I'll put in my 1 order and go home and sleep, right? But you took that extra risk.
Yes.
Are you seeing what they did? Right? And pricing?
Pricing 13, because we had monopoly over the market. We went with the extreme.
Yeah.
Because we had incurred their cost to get that one. So you have to maximize on that. Then the other bit, we had 11.12.
Yeah.
11.2. Then 12.
And then 12. With the 12 is what you lost. So you sold at 11.5 and at 13 maximum price. And
No, we sold 13. The customized, we sold it at 13.
which is the maximum price in the market. So some call it luck, but sometimes it's about timing in business. You might just be at the right place at the right time, at the right moment, and you end up selling. So they getting that option at that time and utilizing that opportunity. Yeah. So you see, there are very many factors that play into running a business, right? Very many factors.
Also, customization is innovation, essentially. Differentiation. They had something that no one else had, right? And that is important to ask. Keep asking, right? What are you doing different? It may not be the product, it may be in your service. You really always have to try to do something different. Yeah.
So basically, it is in this the richest man of Babylon. That's why they define luck as when opportunity finds you prepared.
Exactly. So you have to be prepared. Otherwise, you lose that. Yeah, you lose that. Crazy X, you have the story to tell. You did some financial modeling. The numbers were making sense, so you dived in.
willing to supply even what they didn't have.
Even one day. How many units did you sell? You sold all the 7 units. Ah, what was your pricing? 10 and then 11. What did you spend in advertising? 5. So you're the risk takers in the group. You basically said everything all in. We'll find out what happens in the market. Sometimes people lack that in business, right? Some people always want to play safe. You never know. If you take that extra mile, some returns might come back, right? So they went crazy and it paid off. And they had the units, right? And they had the units.
Suppose we had some things we needed to, so we had to go an extra mile.
You studied the market. You studied the market and knew no one else had those units, and therefore you did the deep dive. The language that is coming from that table. Sounds limited. You are the market leaders, but you still have a strong position, right? It's also something to, we did use, so futuristic. Yeah, you're also among the lowest. What did you get? 28, you have now 39 from 11. That's a very big jump too, right? Tell us your story. What happened? Why did you make that jump? First of all, you had raw materials. Advertising, you spent how much? Spent? 4. Okay. So let's go back to your raw materials, right? Had you not had that raw material option, what would have been your direct costs? Or your cost of sales? Because you had the 24 and then you had the 16, right? So the difference is what, 8? Your direct cost reduced by 8. That would have impacted your here. This would have been lower had you not taken that option. So sometimes it's just a matter of looking for where can I get the same materials but at a cheaper price. Those options are always available, right? And that's also impacted on at the end. So for now, who do we say is the leader in this retained earnings? When I come to assess you as hubs, when you come to assess a business, what are you looking at? Growth, but also you're looking at the stability, right? And steadiness. So we're looking at also retained earnings, right? So we will say retained earnings. Number 1 is ABC Limited. Congratulations, you made a very big comeback. Second is Stance, and third is Futuristic, right? And each of those stories, if there's something to learn from why they made those leaps, right? Even with Crazy, there's a very big story to tell there from 13 to 13. That's a very big leap, right? So how did you find the experience?
Very educative.
Digestible? The financial terms are digestible, right? Understandable?
Yeah, like you can really see why this person who is selling their cakes at 50. You know that they are selling, they are getting like very at half price, turned like packets of flour from the company, and for you are trying to buy the 8 packets.
Yeah.
You can't sell at the same
You
price.
can't sell at the same price. So study the market. Don't be afraid to take risks, right? Timing is also important, but also that comes with studying the market, knowing what do I have, what do they have, what time should I now go and sell in the market, right? There are some businesses that say, I will wait, I will buy stock, then I'll wait when these people are still trying to get, and that's when I'm selling. Right? Like the honey, I think the honey businesses in the north normally do that. I don't know which hubs have those honey businesses. So they buy stock in bulk when there's an excess, and then they sell during periods of, yeah. So it's about timing, and then you make a profit at that period of time, right? Have we met your expectations? Have we met your expectations? We must know the terms in financial management as a team leader. Can you do that, even if you did not have a finance background? Can you do that? Can you?
Yes, we can.
Accountant role versus financial role. What is this? Who does what? Have we answered that? Maybe Ivan will cover that. And then understanding how finance can be used to make business decisions. Have we been making business decisions this whole morning? So do we understand what it takes, what we need to do in finance to make the best decisions in our business? Can we now guide the businesses that are under our hubs? Right? And then using data available to make investment decisions. So I'll leave it to Ivan to answer 2 and 4, and then he'll wind up for us, right? And maybe Perez. So thank you, everyone.
Yeah, so our goal really was focused on number 3, which is understanding. Like I said, no one here is trying to become an accountant if they are not, right? But what is important is that we understand and know the right questions to ask. Yeah? We need to know the right questions to ask a business or ask our accountant if you're a business, right? And you cannot ask the right questions if you do not understand, right? So let the accountants do their role if you have them, right? Let them prepare the accounts, but at least know when they present to you the accounts, which questions are you going to ask, right? And this is also a test for accountants, because like I said, someone had talked about it, the role of accountants is changing. But the accountants who can prepare, and then you ask him, so what drove this loss of profitability, right? And some people may not be able to answer that right away, even as an accountant, right? So it's really important for you to just understand the drivers behind the numbers and where those numbers are coming from, right? So in terms of roles, we are not, again, trying to eliminate accountants. So let the accountants do the role. Your job as a CEO, right, is to just make sure you're using those numbers to make the right decisions. But also on the governance side, you're trying to make sure the numbers are the right numbers. Because if someone presents you now with a balance sheet that doesn't balance, you know already that's a wrong sign, right? But also you can see red flags, sudden increases like we saw are good, but they are a what? A starting point for questions. Say, why are we? Why is this number going up? Right? So trend analysis. That's why usually for me, when I ask for financial reports, I ask for current period and the previous period. You have to show me both together, right? Because I want to see what is changing. So if you are thinking about this month, let them present you the previous month also together. That allows you to quickly see what is changing and ask questions. So if stuff is going up, let them explain. Even 1 hour with an accountant at the end of every month, if they send it to you maybe a few days before and you schedule that 1 hour, it will help grow your accountant. By the way, even if you're not an accountant, just that session can help grow your accountant into a more useful person to you. Because otherwise they are doing what QuickBooks will do in the future automatically, right? So that session becomes also useful to them because you are asking not as a technical person. And those are the most important questions, by the way. The questions you ask as a CEO or from a strategic point of view, they are usually the most important questions. So that is all we had for today. We certainly could not exhaust everything, but hopefully this starts and ignites something. If you do not practice, this will be it. After 1 year, you'll be saying, there is this nice game we had, we enjoyed. So the only way you can make use of this is when you get back, schedule that conversation with your internal accountant first, right? Or even if you are not in position, schedule a conversation with a startup that you're working with and say, let's have, if you have been having monthly check-in that on other things, add finance there. And say, before I check in, just send me your financials. Unless you will have helped that person. Because every month you ask them questions. If they don't have answers, they go back and think about it. And for an entrepreneur, if they are not an accountant, they start to ask those questions, such that they come for your check-ins prepared. Again, if you're to have these conversations, I think you can talk about everything else, but try not to leave finance, because that's where the business is. We've left, of course, you have this tool. You're going with those books, the ones we've been working with, so you can go back and read, right? So you can use that to practice or to design how you want to do it. We've left the other templates, which have just a few couple of templates, bookkeeping, etc. You can use those. Feel free to get ideas and use them to design tools for your own entrepreneurs, right? We don't mind, as long as you don't just copy and paste. And the logo is there, everything is there, and you get it. But feel free to pick those templates, replicate them. We don't mind. Yeah, that is it. Thank you so much. We hope you had a good day and have a good rest of your week. See you next week for another session, I believe, that is not accounting.